All right. Hello, everybody. Welcome back to another episode of The Market Close. It is 3:46 on Wednesday, October 2nd. We've got a lot to break down in terms of what has happened. And over the past couple hours, as I say that, I get a good little notification from one of my favorite applications on the planet, Robinhood. This notification probably affects Robinhood. Bitcoin down below 60K. Of course, why not? Our beautiful flight to safety is flying away down below 60K. We got a lot to talk about. We will have Jason joining us today. I know he said he would. I said he would come on tomorrow. He's actually free today. So at about 4:10ish, 4:05, we will have Technical Wednesday. Get your tickers ready. We'll be here for the next couple hours, and we'll go through all the technicals on all the stocks that are important to talk about. And we'll keep going from there. One more thing is that tomorrow I will be having some Palantir employees join the market close at around 4 o'clock. And Palantir has announced DevCon. I know a lot of people probably saw that, probably don't know too much about it, but think of it as AIPCon for developers. So I have a couple of Palantir employees coming on the show tomorrow at 4 p.m. for about 15, 20 minutes to discuss what is DevCon, what are they doing, what does it mean, and ultimately how you can get involved and win a ticket to go to DevCon. So that'll be exciting stuff, and we'll have that tomorrow at 4 p.m. Palantir, speaking of the company, up 3% on the day, 37.58. It took a lot out of me today, like a lot out of me today to not sell covered calls on Palantir, but I didn't do it because I'm like, you know what? If we have a really nice run towards the end of the year with Japan with some new updates that I'll talk about in a second. China keeps printing. The United States has good growth in Q3. We lower rates again by another 50 bips. Palantir's Q3 acceleration of revenue beyond 30%. I think there is a world, even if the valuation is not rational, I am fully acknowledging it's probably not rational, where Palantir can get to higher levels, maybe 40, 45. I was thinking of selling the $45 covered call for January 2025, but ended up not doing it. So Palantir right here, 37.59, very resilient. Again, I will say the same thing that I've been saying over the past couple of days, but Peter Thiel has been selling a lot, around $700 million worth of the stock, and the company the stock is just not reacting to it. It doesn't care. Again, for context, Michael Dell, another insider, sold about $1.2 billion worth of Dell stock at 122. Dell now about 115. Thiel sold 4 million shares at 36.84 2 days ago. Another 4 million shares yesterday at 37.20. Right now, I took the screenshot when it was 37.40. Right now, we're pushing 37.60. You can sell at a better price than Peter Thiel himself, and that doesn't happen historically when you have insiders dump the amount that they've dumped of a stock and in the time frame that they've dumped. I mean, it's over time. You can kind of play out with the numbers, but when they do it within a very short period of time, it's a signal to the market that, oh, they're calling a top. Maybe they are in the short term, but the market truly does not care. And it's pretty exciting to see Palantir get this momentum. Homer Cut says, I sold the January 17th $50 strike for 93 cents. I don't hate that either. I think, I think $50 by January 2025 is a little tough to justify, and picking up 93 cents is not horrible. I do think, though, if it runs up into 40, 42, you could get a little bit more premium, which, maybe it doesn't. But if it does, maybe that's when it's going to be like really juicy premiums. But people are willing to, people are willing to pay about $400 for the $40, I think it's like $350 to $3.50 a contract, a share for the $45 call, or sorry, for the $40 call for January 2025. So premiums are going through the roof. Obviously, there's a lot of people ready to bet that it can go higher, and maybe it will, but 37.60 on the day, up 3%. There was no big news on Palantir. There was a small partnership we talked about in the morning and Arnie posted it on his Twitter. I'll link it in the chat in a second, but it was around Edge AI, not some like big multi-million-dollar deal. So nothing too crazy that I think could have pushed it up 3%. Outside of the fact that people just want more exposure to it, and we're seeing some momentum. NVIDIA up here right now, 1.8% of the day, up about 2%. S&P 500 goes green as we get into the close at 569. Tesla was down 6%. Now it's down 3.7%. Let's talk a little bit around Tesla. Two things that I saw today on Tesla. Number one, for those that didn't get the delivery numbers were 462,890. And the street did not like that because they wanted 463,900. So they wanted 1,000 more. You could argue that the expectations at 470, particularly based on the fact that Tesla lowered the APRs for most of their vehicles. In fact, I know some people in the chat were able to pick up Tesla with like a Tesla with like a $600 payment, which is pretty decent for a Tesla, just based on that low APR, which will hurt the margins because when you reduce those APRs, those margins get hit. And the fact that they didn't deliver way more than the street expected, and the margins are obviously going to take a little bit of a hit, you could make the argument that, okay, you should sell the stock right now. And I think that's reasonable. I just think going 5% down based on that is not the best in a world in which we have 10-10 coming up. Now, speaking of 10-10, I don't know if this has anything to do with each other, but there is an argument that maybe there will be a McDonald's collaboration. So McDonald's posted this picture with a McDonald's bag and 10-10 on it. Elon Musk followed like 30 minutes ago the senior marketing director of McDonald's. Now, before anyone thinks this has to do with Tesla McDonald's, this background right here is from a popular streamer called Kai Cenat. And most likely, I mean, not even most likely, it seems obvious McDonald's is doing a collaboration with Kai Cenat because this is his stream setup. And there will be, this collaboration on October 10th, 10-10. However, the Elon Musk follow for the senior marketing director of the company kind of makes people think, is there a robo-taxi, Uber Eats type of partnership lined up with McDonald's behind the scenes? Because if they launch some type of cybercab that is able to, with McDonald's, get you a discounted promotion by using McDonald's cybercabs to order food versus Uber Eats. I mean, I know that's a little bit of a stretch, but it's 10-10. Like, we should be excited. We should dream. We should kind of have this idea of something that's really creative. Otherwise, this event is going to be another sell the news. So I'm going to stretch here a little bit. Because like, if we don't stretch on this event, what event are we going to stretch on in terms of seeing some unique momentum outside of Tesla? So again, it is a stretch, probably not happening, but the fact that he followed the senior marketing director, maybe there's some juice there, and maybe there's a partnership that's cooking up. The other theory I had is Optimus is going to be like inside of McDonald's restaurants, potentially making burgers. That's also probably even a bigger stretch, but I mean, the event's called We Robot. Maybe there's something there. I'm just hoping there is something really cool at this event that's going to be announced, because at this point, what I've learned today is the stock is very sensitive. I mean, for them to miss by deliveries by 1,000 and for the stock to fall 6%, recovering a little bit right here, but for investors to get that upset over that small of a miss, it means that on 10-10, if they don't show something really cool, I think investors are still going to be really upset as well. And so we'll see what happens, but that's what we got going on right now in the context of Tesla, 248.22 on the day. Robinhood had a nice day, but now Robinhood was 23.05, 23.10 at one point. Now it's at 22.66. The reason it fell from 23 back into the mid 22s, still up from where it was yesterday, I think is because of Bitcoin. Bitcoin looks like it's barely holding on to 60,000. I don't know why Bitcoin's down outside of the same thing that we talked about yesterday, which is the Middle Eastern headlines that have, obviously not been good for Bitcoin. Larry Fink's ETF, BlackRock, he actually bought $40 million of Bitcoin yesterday. Every other ETF sold. So again, bullish on Bitcoin, but it is kind of getting into a downtrend. We'll have Jason come on in a couple minutes and talk to us a little bit more about the TA. It does seem like the Middle Eastern headlines has scared Bitcoin, and that's why people are taking some profits on this right now and maybe rotating into other stocks as well. And Wilson says, so should you buy a stock because of an event? No, I don't think you need to buy a stock because of an event. I'm just saying that, hey, if you've bought the dip on Tesla all year and you are expecting a nice 10-10 event to kind of sum up the year, and maybe this has this run all the way to 300 that a lot of people are predicting if the event is that cool, then that's something people are speculating on. I don't think buying Tesla at 248 on the assumption it can run to 300 is the best idea. But if you bought it at 200, 205, 190, 180, you got the bottom at 130, then it would be nice to see some momentum towards the end of the year, because we know earnings are going to be kind of crappy. I mean, like, based on the delivery numbers today, we know the earnings are just not going to be the best. You don't have to be a rocket scientist to say, okay, the margins are going to come down. Deliveries are not that much higher. They did sell 27,000 more cars than they did last year in Q3, but it's not enough to even CAGR at 10%. They would have had to sell 531,000 cars at this point, almost 595,000 cars for the next 2 quarters just to CAGR at 10%, which is what they've historically been doing. They're going to probably CAGR, I think, at 4 or 5%, maybe even decrease the amount of cars overall, because Q1 had 385,000 cars sold. So it's not going to be a pretty earnings, which is okay. But that means the narrative on 10-10's got to be good. And the question is going to be, is that narrative good for 10-10? Amit, do you know who the Rizzler is, or even Big Justice? Like, for real, do you know them? If you don't, IDK, why you're talking about anything, but look them up. I know these people. These are TikTok dudes. These are the Costco guys, right? The chicken bake, the double chunk chocolate cookie. Dude, I consume some content outside of stocks, okay? So yes, I know the Rizzler. I know Big Justice. I know Kai Cenat. I watch other things besides just the stock market, even if it's only for like 10 minutes a day. But yes, I know these characters that you were speaking about. Okay, we got some news out of Japan as well. We got the market close in 4 minutes. So Japan said some interesting stuff today, which was really good for equity markets. The new Japan PM, whose named is Shigeru Ishiba, but every time I see it, I just go to Shiba Inu. So I'm just going to call him SI. The new Prime Minister SI said the economy isn't ready for further interest rate hikes following a first meeting with the Bank of Japan governor. Ishiba said conditions weren't right for the BOJ to move again following 2 interest rate hikes earlier this year in comments that jolted the yen to its weakest against the dollar for the day. This was really nice to see because USD to JPY was trending towards 142. Again, the relationship between these two assets, you want the yen to go down against the dollar, which means you need to see more yen available for every $1. So based on this chart that you're looking at right here, if I give you $1, I get back 146 yen. So my dollar has more purchasing power. My dollar is strengthened against the yen. When the number of yen I can get for my dollar goes down, the yen starts getting strengthened against my dollar. My dollar gets weaker against the yen. And that leads, and it led to the 2-day apocalypse of the yen carry trade. And that's what led to tech stocks falling off. Now, most of the yen carry trade, aka the shorts on the yen, it seems like 90% of those are done. But you don't want the yen being so strengthened in a world in which every other major economy, including China, is lowering rates aggressively. You don't want to see Japan raising those rates to try to, in my opinion, make a political statement about why their currency deserves to be higher than it currently is. So that's really good news that we got. That came out a couple hours ago. And so it's nice to see that helped. Is that the reason why the market went a little green? Maybe, possibly. But in general, it's just one of those good things in part of the broader macro landscape that was important. If you missed today, the private payroll numbers, we came in at 143,000, which was above expectations of 125,000, which is not bad. The caveat here, along with the JOLTS number that we got yesterday at 8 million jobs versus 7.6 million, is do you believe that we have 400,000 more jobs available? Do you believe that we actually added 142,000 jobs this morning in private payrolls? Or do you believe these numbers will be revised? There is a world in which they're revised, but the market's going off the data that they feel right now. And so far, it feels like the market does care about these numbers. But again, the Middle Eastern headlines from yesterday is kind of what made the market still not really get momentum today. I mean, those numbers were pretty good, but I think the market still has a bit of uncertainty based on what's going on with Iran and Israel. What's the next market catalyst? It is on this Friday. Jobs report this Friday. So we got private payrolls today. We get non-farm payrolls on Friday. We'll talk about that more when Jason joins, but those two, that's the biggest catalyst. And then CPI right after that. And then once we're done with NFP and then CPI, then we've got Q3 earnings. So October is going to be a big month. And if those three things can line up correctly, we add hopefully 140,000 jobs. CPI comes in at 2.3%. And then Q3 earnings with financials, I think starting off October 11th, are strong. Then I think we see some momentum in October, but we will have to see how these companies ultimately execute. All right, we got about 30 seconds left. Looks like Palantir is going to close around this 37.50 range. We haven't closed here in about a week. We've been testing high 36s, low 37s. 37.50 close is pretty phenomenal for a stock that has seen some massive insider selling. So not bad if we get that close today. And then we will get into Technical Tuesday. Also, I'll talk about Openai after the bell. I didn't even get to talk about Openai, but yeah, we have some shocking stats in terms of Openai's fundraise, and we'll talk about the implications of that for the broader AI sector. All right, Wednesday, October 2nd, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. Palantir, 37.50 on the day. Not bad. Oh, yeah, we got Accenture CEO with Jensen Huang. Let me pull that up as well. Thank you, Tyler, for reminding me of that. So NVIDIA and Accenture created a partnership today to enable AI through enterprises. I mean, I don't know what exactly the partnership is, but I guess we'll hear from them in a little bit. So let me pull that up. We'll try to listen to them talk and get their perspective on that. But you got a Palantir close at 37.50, which is not too bad. NVIDIA closes at 118, up about 2% of the day. S&P 500 closes slightly green, but does close green at 568.84. Microsoft closes red by about a 1%. Apple, wow. When did Apple go green on the day? Apple went green. Holy crap. 223 to 226.78. Apple up about 25 bips. Oh, Jason's going to love this. Jason's going to love this. All right. So Apple's up 226 right there. So you got Apple that's green. The Qs went slightly green on the day. Meta slightly red by down about 0.5%. SOFI was green, up about 2% on the day. Energy was up, given oil was up on the day. Snapchat. Here's an interesting stat about Snapchat. You know, we were talking about Snapchat in the morning. This stat about Snapchat might blow your mind. So Snapchat, since going public, has lost $10.5 billion. They have given stock-based compensation of $9 billion. 90% of what they have lost for investors has been redistributed to employees in stock-based comp. I mean, it's just an incredible financial engineering feat by this company. But this one was up 4% on the day at 1089. FXI China ended up 7.29% on the day. Alibaba up 2.2%. Rocket Lab recovered everything. It was down about 5% in the morning. Now it's up 5.2% on the day. I missed the Rocket Lab recovery as well. I did not see Rocket Lab recovering. MicroStrategy down. MicroStrategy was actually up 1% on the day. It was down a little bit earlier in the day, but now it's up. Airbnb closed up a little bit on the day. Occidental closed up as oil went up. Qualcomm was up. Semis were up. Netflix was up. Robinhood closed at 2263, up about 1.34% on the day as well. Dell 113. It was up a little bit, but still down from that 122 price where Michael Dell ended up selling some of his shares as well. Bitcoin did hit 59,000 at 346. You are correct. It jumped from that level. Now Bitcoin right here at 60,271 currently right now. Okay, let's talk about OpenAI. Let's talk about OpenAI. Oh, Enovix as well. Yeah, Enovix, they announced some partnership today. So if you're in this one, I don't know if this was a squeeze, but this was a partnership they announced that the street liked. This one was $18 at the top of 2024, came all the way down to like $8.50. Now at 10:30, up 20% of the day. So shout out to people that had Enovix. This one had some momentum today as well. Okay, so let's talk about OpenAI. OpenAI has officially confirmed, this is not speculation, they have officially confirmed they raised $6.6 billion at a not $150 billion valuation, $157 billion valuation. I think we all just need to take a second and recognize this. Like, as investors, as people that are trying to have some understanding of what's going on in the real world, a startup raising at $157 billion is quite insane. These are, to give some context, OpenAI is more valuable than Goldman Sachs, than Uber, and then Caterpillar. Those three companies are less valuable with much, much more cash flows and net incomes. I mean, Uber and Goldman Sachs are less valuable than OpenAI. So the potential that investors are seeing in OpenAI is just incredible. And one other thing that I think is really important about this is that OpenAI, if you're investing in a venture round, which most venture investors invest for a minimum of 10x. I mean, like, you're not investing in startups if you don't expect, massive potential. Otherwise, you would just invest in the public markets. They're expecting a $1 trillion outcome, in my opinion, probably a multi-$1 trillion outcome, which is what justifies the ability to raise at 157. Now, here's another thing when you look at some context. Elon Musk started an AI company a couple months ago. He raised $6 billion at a $24 billion valuation. He sold 25% of this company to raise the $6 billion. OpenAI, with 6.5 at 157, sold 4% of their company to get the same amount of funding. OpenAI also confirmed today that they went from 200 million that they said last month of weekly active ChatGPT users to 250 million weekly active ChatGPT users. I would be really curious to see what are the Grok weekly active users. Twitter itself has about 500 million weekly or 500 million monthly actives. Grok, I don't know, is that 10%? Is it 50 million? Like, how many people actually use Grok on a weekly basis? But the fact that OpenAI only took away 4% of their company to raise this money, and Elon had to give away 25%, just shows how bullish investors are at the end of the day when it comes to OpenAI. Now, what does that mean for the broader AI trajectory? Number one, I think all of that $6.5 billion that they raised today at a $157 billion valuation, if not all of it, call it 70 to 80% is going to one company, and you guys already know what the company is, NVIDIA. Maybe that's why NVIDIA went up 2% as well, because obviously that money is going to NVIDIA. It's not going to be going to many other companies. Microsoft invested $750 million in the equity round. SoftBank invested $500 million. And the only reason I think SoftBank got in is because Apple pulled out, which we still have no real explanation why Apple pulled out. I think it has to do with the CTO and two other execs leaving in the same day. But NVIDIA also invested as well. So NVIDIA invested, Microsoft invested, SoftBank invested, Thrive Capital, which I believe is Jared Kushner's fund, 1.25 billion they put into the round. So you've got a lot of investors that have made a pretty calculated bet. And I think for OpenAI, for NVIDIA, it's a no-brainer because they know that Blackwell is probably going to be the number one thing that OpenAI is ready to buy as soon as they finish raising this money to train ChatGPT 6, 7, 8, 9. I mean, like, this relationship is probably going to go on for a long time in terms of CapEx and chips that OpenAI is going to be purchasing. So that's what we had in the context of OpenAI. Now, what does that mean for Palantir? I mean, look, at the end of the day, is Palantir's valuation at 84 billion making sense? No. However, if OpenAI can lose money, I think they lost 5 billion last year, and raise at 157 billion, just based off the potential of them solving the AGI, problem that exists. They want to be the first company to get to it. Palantir is probably not going to solve AGI, but if Palantir solves enterprise AI applications, which one could argue maybe is not as valuable as AGI, but it definitely has like a ton of value, like being able to unlock trillions of dollars of productivity for the enterprise and being one of the only software companies that can realistically do that. Is that worth 85 billion? Maybe. If OpenAI is worth 157, either this is a bubble with Palantir at 80 and OpenAI at 157, or this is really the start of something special over the next 5 years. And based on the evidence I'm seeing in regards to the research on AI, I think it's the latter. I think it's based on something special. Are valuations a little stretched? Yes, but valuations are always going to be a little stretched when it comes to getting something that people like. And look, I mean, if Peter Thiel can't dump the stock in terms of crash the stock after selling almost $1 billion worth of shares, then I think people definitely have animal spirits and have some appetite if they can't get into OpenAI to maybe get into Palantir. So that's some of the implications I think that OpenAI has and the overall fundraising has when it comes to Palantir. Arnie says nobody uses Grok. I've used Grok a couple times in the past week. I use ChatGPT way more. I do agree, not a lot of people use Grok. However, a lot of people do hate Sam Altman, and they refuse to use ChatGPT. Like, I've talked to some of these people, they are not fans of Sam Altman at all. I get it. I personally like ChatGPT. It's a good product, and it's very easy for me to use. It's quick. It's fast. It's something that I like using. So there are people like me that will just pay for ChatGPT and use it. There are other people that will only use Grok. I don't know how many people in the world really know Grok or even use Twitter. You guys got to remember, Instagram has 1.9 billion people daily, not monthly, daily. Twitter has 500 million monthly. I think it's about 245 million monetizable daily active users daily. A lot of those, you could argue, are bots. You could also argue that number is way off because that's the last public metric we got from 2 years ago. So Twitter is not Instagram. It's not TikTok. It's not a platform that's, I think, in one day might have billions of people, but currently it's not the platform for billions of people. Because again, you have to be able to like type stuff up and like have thoughts and want to read stuff. And most people just want fun videos that they can get dopamine off of. And that's where Instagram and TikTok comes in, and YouTube as well. So I don't think Grok has as much distribution as ChatGPT. The question is, will Grok be more valuable than ChatGPT based on this idea of not being woke? Which there is an argument that, yeah, ChatGPT is just too restrictive. I don't know if that's the biggest argument for why Grok can justify their valuation against ChatGPT. But that's what we got going on right now. Kathy Wood also invested in OpenAI. She put about $250 million into OpenAI in the ARK Venture Fund. Will OpenAI have a $1 trillion IPO? I think at some point, whether it's an IPO or whether it's a secondary sale, people will have to get liquid on OpenAI, and that would have to give a valuation that is simply higher than what we have. NVIDIA CEO Jensen Huang will be on CNBC in about 10 minutes. So we'll wait for about 10 minutes, and then we'll listen to what Jensen Huang has to say. And then we'll keep going from there in terms of their partnership with Accenture. Would you invest at 157 billion? Would you invest at 157 billion when it comes to OpenAI? I know the valuation's crazy. Like that's not something that anyone has to be convinced of, but do you still think the potential alone is enough to be able to invest in it? Gene says people are saying that's the top signal. I don't know. I think everyone's been trying to call a top signal for a while, and I don't think we fully have one yet. I think Databricks going public is more of a top signal because that means there's a lot of liquidity for companies that, in my opinion, are important but are not as transformative as a company like Palantir. But I don't know. I mean, like maybe it is, maybe it's not. I guess we'll have to see. I just think if you have Microsoft, NVIDIA, and SoftBank, and SoftBank's not the best example. Let's just use Microsoft and NVIDIA. For them to invest close to, what is it, 1.2 billion into the company, it's like they see something that they have that's very special in the context of OpenAI or their GPT that is years ahead of the other large language models. And for OpenAI to maintain that momentum, they've got to have more money to be able to buy more compute. Now, you could argue Microsoft gets more cloud workloads from OpenAI and NVIDIA gets more chip sales from OpenAI, so they have a perverse incentive to continue to prop up the startup. I totally am sympathetic to that. But you could also say these are the smartest companies in the world that are recognizing the value of the LM. It's one or the other. And over the next few months and years, we're going to figure out what it ends up being. I've been thinking about the Palantir covered calls since you mentioned them. 1,000,000% selling goes tomorrow. Who is selling Palantir covered calls? Put in the chat. I'm telling you, bro, I was a swipe away from selling the 45s for Jan 2025, and I chose not to do it. I was like, you know what? I'm going to be annoyed if I end up doing this, because then I'm going to have to monitor it. And then if it goes up too much, I'm going to be like jittery. And so I'm like, you know what? Let's just let the rest of the, let's see what happens toward the end of the year. If it does fall, I'll just buy the dip. So I don't care too much about that. But I would rather not, risk the shares just for that. And I know that sounds crazy because the valuation right now already is crazy. So at 45, it would be even crazier, but things can get crazy. It's the stock market. Things absolutely can get crazy. Bsoft says, I would say I would have more confidence in interested in investing if the truth regarding employees leaving came out. They said they don't like going public, then fine, I would invest. I agree. If they fundamentally explained why people left the company, I would be more open to be like, okay, so that's a reasonable explanation. Bitcoin right here recovering a little bit. But the lack of transparency and the fact that some of these people that left are really important people in Silicon Valley, like these are not people, like Bob McGrew, who used to work at Palantir, him leaving is like, it's just a red flag. And it's just like no explanation is tough to swallow. So I agree. An explanation that would help people have a better understanding of why they should invest as well. Almost sold the 50. That's fair. Arnie says no covered calls. I have some cash aside. I also think that is fair, especially if we get a dip, which we haven't been able to get yet on Palantir. OpenAI is basically the first IPO of this AI wave. I mean, yeah, I would imagine OpenAI becomes the first real IPO of this AI wave, because we haven't had it yet. Reddit, by the way, Reddit stock has been phenomenal. I was wrong on Reddit. When Reddit went public, I felt it was a little aggressive. The problem was with Reddit, there's two things I missed. I missed that their valuation actually was reasonable. Like, it was very reasonable. It was trading at like 6 billion going public. Like that is not crazy to pay for a company that was 2 quarters away from profitability, which I think they're now like 1 quarter away from profitability. And B, they did have a moat in regards to the types of content on the platform. I know there's a lot of trash on Reddit, but there's a reason Google and all these other companies are paying Reddit for their content, is because they have some of the best data that's user generated and that fuels AI models. So Reddit has doubled in the past 5 months. And if you got into Reddit, I mean, congrats. It was a good deal. It was a really good deal. But Reddit has really been the only company that's IPO'd from an AI perspective that has been meaningful. The rest, I think we're still waiting to see. Still no NVIDIA CEO yet. He'll be on in probably 5 minutes, and then we'll take a look at what he has to say with Accenture. I don't expect the Accenture partnership to be that big of a deal. Every company outside of Palantir has found a way to partner with NVIDIA, whether it's Salesforce, whether it's, what's the other one? Snowflake, whether it's Accenture, whether it's CrowdStrike, like they all find a way to like use NVIDIA's brand. So I think Accenture is doing the same thing here, and NVIDIA is obviously leaning into it because that's good for NVIDIA. But it'll be interesting to see if there's anything unique that they have to add to this partnership. Christian, thank you for the $2 super chat. Mira left because she tried to take out the king. I mean, maybe that's what happened. Maybe, I guess we'll see, but maybe that's what have happened. Gene says Bank of America is down. Customers report zero balances. Yeah, did anyone see that today? I didn't experience that, but apparently this is why Buffett has been offloading. I'm just kidding here, but maybe that's why he's been selling B of A. I mean, they showed everyone at a zero balance today, which was a little bit freaky for a lot of customers. That's probably just a random glitch, but Buffett did sell another 11 million shares 2 days ago, so he has been offloading a decent amount of Bank of America. Levi falling on earnings. I forgot Levi had earnings. The Gene Company down 7%. All right, let's check their numbers. So we have Jensen in 5 minutes. We're going to listen to him. After that, we're going to have Jason come on the show, and then we will do all the technicals that we have to do. So get your tickers ready because we will look at the technicals. So the market wanted $1.52 billion in revenue from Levi's jeans. And they wanted 33 cents of EPS. Levi put up 1.51 billion. So I think they missed on that. And then EPS, they put up 33 cents. So they beat on, I mean, they came in line with EPS. They missed on revenue, down 8%, $8 billion company for Levi's. Does anyone own Levi's, dude? Levi's, I mean, I'm pretty sure people own the jeans. Levi's year to date. Wow, Levi's is up 30%. Now it's up 21% year to date, but this actually had a decent year. Over the past 5 years, it's up 10%. It went public back in 2019. I thought this was public for longer. I will go through their transcript and try to see if they said anything about the consumer. Levi brand grew 5% globally in Q3. Wholesale net revenues decreased 6%. DTC net revenues increased 10% direct to consumer. That's good. The company returned approximately $69 million to shareholders in the third quarter, a 45% increase over the prior year. Do they have a dividend? They do have a dividend, 2.4%. All right, so that dividend probably returned some money to shareholders. All right, Jensen's on. Let's go to Jensen, and let's see what he has to say. Here we go.
The world's data centers. $1 trillion worth of data centers being reimagined and modernized to be prepared for generative AI. And a lot of our focus has been in the cloud, in data centers and such. What we're looking at now is the beginning of the next wave of AI, the biggest wave of AI. And this is really about companies around the world using AI to be more productive as their digital employees and AI agents and co-pilots and however people describe them, as well as using AI, generative AI, to revolutionize the way they build their products and the products they build. And so we've created 2 operating systems to be able to do that. One of them, of course, is large language models with NeMo and NIM and all of our AI factories work. And the other operating system is Omniverse that allows us to represent digital information that is for the world of space-time. And these 2 operating systems are fundamental technologies, of course, but ultimately, in order to drive business impact, we're going to need a transformer, a transducer, somebody who is the connecting fabric between our enabling technology that we build in AI Foundry and Omniverse and connecting it to customers and their business impact. And that's Accenture. I can't imagine a better partner. Julie and I imagined this partnership about 4 months ago. And after that, our 2 engineering teams and research teams swarmed the building of a new platform that Accenture calls AI Refinery that helps customers build AI agents and co-pilots and AIs that help them use tools and access proprietary information and to be able to perform tasks and drive productivity. And we're working together across the agents space for employee co-pilots, as well as the metaverse place, Omniverse space for digital manufacturing. So we got a really big partnership.
Okay, and Julie, give us the big picture here for you strategically. Last year, you told us Accenture is going to invest $3 billion over 3 years in your data and AI practice, that you double your AI talent headcount to 80,000. How much of that $3 billion and 80,000 is going to be focused on the NVIDIA stack?
Well, NVIDIA Stack is a great example of exactly how we're investing, because we're investing to actually help our clients accelerate their use of Gen AI to go faster. And by the way, we're using it at Accenture. So one of the things that Jensen and I agreed from the beginning was we need to have Accenture be our own best credential using this technology. And so we have now used it and are deploying it in marketing, using the engine of NVIDIA, and then seamlessly integrating across our technology stack and across our other investments in Gen AI to now go to market 20 to 50% faster to reduce our cost. And most importantly, we rewired our marketing function to get our campaigns to actually have 35% less steps. And that's what Jensen talks about, the transformation piece of this is we're not taking technology and just applying it to what we do today. We're rewiring. We're doing the same on the manufacturing site. You probably don't know, John, but we have at Accenture 1 million square feet of manufacturing space. We manufacture customized automation robotics, and we're using the combination of AI Foundry and Omniverse, starting in the design cycle to reduce that design cycle on those customized robotic automations by 50%. We're at the beginning, we're rolling it out, but we're demonstrating that agentic architecture is real, it's scalable, and we can use that engine across and leverage the digital cores and the Gen AI investments our clients are already making.
Julie, I did not know that, so that is good to know about the manufacturing. And Jensen, so about this go-to-market, fit it for me into the strategic framework for you. We know NVIDIA is part of OpenAI's $6.6 billion funding round announced today, largest of all time, and that models like the ones that OpenAI provides drive demand. So tell me how you view this full ecosystem working, from chips, platforms, models, applications, and then this go-to-market that you just talked about with Accenture.
Well, NVIDIA is a company that's building the full stack. We build the entire data center of AI infrastructures, from GPUs, the CPUs, the networking chips, the switches, the NVLink switches, and we build all of the software that's necessary to bring up an AI infrastructure. But this is a brand new way of doing computing, and we're dedicated to build the entire stack and reinvent every layer of the technology stack so that cloud computing companies, scientific computing companies, healthcare companies, and the world's enterprises, automotive companies, logistics companies, every company in the world can benefit from this revolutionary new technology we call AI. And so we're building the entire stack. With respect to our partnership with Accenture, no one has a greater reach. And because of what Julie was saying earlier, Accenture has a very large number of professionals that they're using themselves as a reinvention of how Accenture runs. And the urgency and the agility and the velocity that Julie and the team were able to harness was just incredible. And that's why we were all in working with them to reinvent the way that employees work, as well as in digital marketing, reinvent the way that things are made and the type of products that we make. There's a third area where we partner together, which is sovereign AI. There are companies all over the world, countries all over the world now realize that their natural resource is their digital data, their language, their culture, their industry, their universities, the knowledge that they create. That data is now, that intelligence is now codified in their data, and they would like to use that data, harvest that data, process, refine it into their own national digital intelligence. We partner with Accenture to be able to help countries around the world to create their, if you will, sovereign AI. This partnership allows us to span a very large part of the world's AI demand. Where this resides, the first wave, as I mentioned, was the creation of the foundational technology, the data center and such. This is now the beginning of a new wave called enterprise AI. And then after that, as we're entering into enterprise AI, we'll simultaneously developing, cultivating the wave after that, which is industrial AI. It is incredibly hard to do, but this is the area where digital manufacturing that Julie has a great deal of expertise and scale in, and our technology in Omniverse, I think bringing it to bear, combining with generative AI, we could make a big difference.
We were just talking with Synopsys' CEO about exactly that a little bit ago as well. So Julie, this summer, you announced what Jensen mentioned earlier, Accenture AI Refinery. I think you got something like 700,000 pairs of feet on the street dealing with this. Built on NVIDIA AI Foundry on that stack. You also emphasized in that announcement Meta's Llama 3.1. So to what degree are these technology choices, these announcements, exclusive right? Because we're going to see AMD, we're going to see, lots of different software providers, including NVIDIA and Meta, coming out with different options. Are you offering the broadest menu? Are you going to be emphasizing with your workforce more specific ones? How should we fit this announcement into that concept of exclusivity?
John, it's such an important question because what NVIDIA and Accenture does is we think about our clients first, our customers first. And the NVIDIA engine and the AI refinery works with the world's best technology systems. It works across all of the clouds. It integrates the Gen AI investments that our clients are making with the best technology companies in the world to create a solution. What the AI refinery is doing, fueled by the great technology of NVIDIA, is to be able to take all these things to do and create custom AI, to do things solving problems like working across the enterprise. So in our marketing group, for example, we have people now having access to real-time digital workers who are constantly being able to give feedback to tell me, what's happening in the market. Is what I'm doing, is my campaign the most competitive? That used to be a lot of people and a lot of different groups at Accenture having to come together, right? And so our focus is about being able to work across the tech ecosystem seamlessly. And that was one of the principles that Jensen and I both have as we work with all of the partners, because that's what our customers need. And that's what makes this so unique.
Jensen, when you talk about industrial AI, so much of the physical world is not yet digitally mapped. And so we're talking with a number of companies that are in the process of trying to do that. We just had Gecko Robotics with us at CNBC yesterday. Samsara, we talked to a lot on overtime. What further investments do you need to make, sorts of partnerships do you need to make to really drive toward that reality for that next stage so that AI has the full impact that you're expecting it will?
The first thing that we have to build is Omniverse. This is a journey that's taken us now 6 years. An operating system that understands space-time, understands physics, understands geometry, the things of the world. Omniverse simultaneously is inventing new AIs that allows us to take information that is video into 3D, images into 3D, point clouds or LiDAR into scanned information into 3D, photogrammetry into 3D, images into 3D, text into 3D. And now we have these AIs that are connected into Omniverse. It's plugged into the world's ecosystem. For example, you mentioned Synopsys earlier, working very closely with Synopsys and Ansys and Cadence and Autodesk and so many other software developers to connect their tools and their data into Omniverse. Once we do that, then the rest of it is about connecting virtual factories, the robots within those factories, the robotic systems that are going to be operating those factories, and we're going to have a digital representation or a digital twin of almost everything that we build and the factories that we use to build it. And once we have that, of course, just like we have digital twins of our companies with all the data that we have and all the employees that are inside using it, we're going to have a digital twin of factories. And the partnership we have with Accenture is about taking the AI refinery that the service that they built on top of both of these things and underneath the two foundational operating systems, the AI Foundry and the Omniverse infrastructure and platforms, and connect them into customer impactful business applications.
Jensen, you've laid out a game-changing concept there, and industrial policy, it's something that governments focus a lot on. To what degree do you see governments wholeheartedly embracing this because of its potential for growth, but then also disruptive potential? Who's doing the best job out there?
Well, Julie and I spent a lot of time with CEOs and government officials around the world, and I would say that there are no countries who don't want to leapfrog with AI. No countries want to be left behind with digital intelligence. Everybody realized that manufacturing, producing intelligence is one of the most important things they could possibly do. And the artificial intelligence opportunity is their country or their company's best opportunity to leapfrog and get ahead. And so we're just seeing extraordinary enthusiasm, excitement, and great demand all over the world.
I appreciate you both being with us, Julie, Jensen. Jensen, real quick, before we'll let you go, give me a sense on whether that demand for your AI product, your whole stack, not just the chips, continues to be just as strong, and whether you're feeling the sense that the upcoming chip platforms that you have coming are on schedule.
Blackwell is in full production. Blackwell is as planned, and the demand for Blackwell is insane. Everybody wants to have the most, and everybody wants to be first. The thing that we have done with Blackwell and what we have announced, this new AI infrastructure generation every single year. And so we're going to update our platform every single year. And the reason for that is if we can increase the performance as we've done with Hopper to Blackwell by 2 to 3 times each year, we're effectively increasing the revenues or the throughput of our customers on these infrastructures by a couple of 3 times each year. Or you could think about it as decreasing cost every 2 or 3 years, reducing energy efficiency every single year. And so at a time when the technology is moving so fast, it gives us an opportunity to triple down and to really drive the innovation cycle so that we can increase capabilities, increase our throughput, decrease our cost, decrease our energy consumption. And so we're on a path to do that, and everything's on track.
Yeah, that pace also might make you pretty hard to catch. Jensen Huang, Julie Sweet, thank you so much for joining us exclusively here on Overtime.
Thanks, John. Thanks, Julie.
Thanks, John. Thanks, Jensen. Good to see you.
All right, there you go. That was the Jensen interview. I think the last 45 seconds of that is pretty much what pumped the stock. I mean, literally the stock was dead until those last 30 seconds where he said Blackwell demand is off the roof. We're at 119.32 in the stock, up about 0.5% after hours. It was up 2% on the day. I need to watch that again and fully understand what they're doing with Accenture, because I don't think there's anything super crazy outside of both firms just partnering and the Accenture employees, aka the consultants, being able to use some of the NVIDIA tech stack to better help their clients. And that obviously helps NVIDIA at the end of the day. It helps Accenture give better solutions to their clients. And so it's a win-win, but nothing too crazy. The last thing he said about Blackwell demand being strong and through the roof and production being in place, that is why you got NVIDIA up a little bit after hours. Accenture, ACN is the ticker symbol. They are up 1.29% after hours. They're up 1% of the day. 360 is the stock. And not too bad. Doesn't hurt for Jensen and Accenture's dual partnership. Now, one thing that I've just been thinking about for a while, I'm sure a lot of you have been thinking about, this entire year, I have not heard Jensen Huang say Palantir. Like, I don't know if anyone has a clip of, I've not heard him say Palantir, Alex Karp, or anything related to Palantir. And it's one of those things where it's like, if Palantir is a premier AI company, you would think he mentions them more, but he doesn't. Now, you could also argue Palantir doesn't need Jensen to mention them because Snowflake needed them, and we've seen what's happened with Snowflake. Like, Jensen literally was on the stage with the Snowflake CEO talking about how revolutionary their go-to-market is together. Obviously, we've seen what has happened. So it is interesting that he has never mentioned Palantir. Maybe that'll happen, but Palantir really hasn't needed it this entire year. All right, we are transitioning now in the market close to Technical Wednesday. I'm going to bring up my good friend Jason, aka Paper Gains. Get your tickers ready. We are going to go through all the technicals that we have to go through for a variety of tickers. Let's roll the intro. All right, there we go. I got the intro loaded up. That was kind of smooth. Jason, what's up?
Smooth, man. We're in.
That's motivating me to want to make my own intro for the show.
That's how it's supposed to be. Guys,
what do you think? Should I have my own intro? Because that was really cool, dude.
How do you not have your own intro?
I felt like a professional broadcaster. That was cool. That was awesome.
Absolutely. And it was audio perfect. Send your stuff over. We'll have the guys make one for you. Okay, for sure.
I love it.
So yeah, I'm actually kind of excited about this Accenture move. Do you guys not know Accenture or?
Let's get through a bunch of tickers because I know people will want to care about it, and then we'll get into Accenture because I know you understand this company really well and you can help explain it. Before we get started, just like start of October, it's been a hell of a first day. A lot of headlines came out. What are your general thoughts on October? And then we'll get into the tickers.
Well, I mean, sorry, we're sharing screen. So I think the market is kind of at critical mass, to be fair.
Do you have the AC on right now or no?
Oh.
I got you, baby.
Dude, it's really hot over here.
That's okay. Well, I forgot. In California, yeah, I would imagine.
Yeah, it's like supposed to be 90 today. Is this turning off?
In October? That's ridiculous, bro.
I know. Well, it's the Indian summer.
Ah, interesting.
You heard of that?
No, I haven't heard of that.
Okay, looks like it's turning off. Okay, is it better?
Yep,
should be better. All right, so here's where we are on the market. Have you ever heard of the phrase "Sell Rosh Hashanah, buy Yom Kippur"?
I have heard of that actually. Yep.
So tomorrow is Rosh Hashanah. Just saying. I don't know if that matters much at all, but so this is where we are at the market. Critical mass today. We'll see if this thing with Jensen can save the market. I think NVIDIA, it's a really important stock overall, right? I mean, it holds up the Qs as a whole. What we can say is we're holding the 20-day simple moving averages right now. In terms of SMAs, so this is these little lines right here. We do like to see the distance between them widening. That's ideal. Let me take some of this stuff down. And, where we are, we're basically right at that consolidation point of last week.
Right.
So this is last week's kind of like chop fest, if you will. Right here, literally right now is pretty much right as you probably can't see this, but I'm hovering right over the point of control. You can see on the right-hand side of my screen, this is that volume shelf, the peak volume shelf. We are at critical mass. So just know that where we are in the market, the bears are waiting. They're like waking up out of hibernation right now. And they're potentially going to try to get up and push us down. They've tried so hard recently, but they really haven't been able to get some ground yet. What I'll say is that it's going to come down to Friday's non-farm payrolls event. So if you look at my screen, we developed like this little indicator called it just shows you NFP levels or non-farm payroll levels. Let's go back. Let me take all this other stuff off.
Private payrolls today actually came in pretty nice. So
private payrolls are out today. But this basically shows you where like the days that we get a non-farm payroll report. So this is the day that we did get a non-farm payroll report. That day itself is just like a normal day, but it's about how the market digests that data, and it kind of puts a cap on the market itself. So after we get the data, this is going to be like a Friday. Sometimes you get a couple days of digestion after, but as long as you get a full like open and close, open, push over, and you start trading over whatever this Friday's high ends up being through October, that wasn't picking. Oh, that's all good. Butt buckers. As long as we start trading over this Friday's high next week, then I don't think we have anything to worry about.
Which is what, 485-ish?
We don't know what it is yet because it's going to come out this Friday. So whatever the high of the day is this Friday, this coming Friday, if the week after and the subsequent weeks are above that high, we are just going higher. And I will say that definitively, without a doubt, this is not a 90%. This is not like I'm guessing. This is definitively, we are going higher. If, on the other hand, we are below Friday's high, Friday's low next week, then we are definitively going lower. And it's just going to be as simple as that. And this is how it works. This is, you can front test this, back test this, whatever. I'm going to show you a couple what it looks like, but it's just like this inside of Friday's range. Next week, you kind of sit on your hands and you just wait for the market to digest the data and price it in. But eventually, once you get a trend out, then you're good to go. This is another day. So this is a Friday non-farm payroll day here. You finally get up over. You sometimes get a little bit of retest, but as long as you're over that Friday's high, this happens to be May, then you're definitively going up. It's going to be a bit, see if I can find one that's lower. And then these levels hold true, right? This is a range where it basically defines the trend really for the month. So here's one where this is a Friday low. The next day we just open below, you kind of reject. But again, if you're below that, then you're just not going higher. And it's not until you're finally over that Friday's high that you actually do trend. And you just kind of go range to range. But again,
Right.
on payroll day, even if that day is low, so even if this non-farm payroll day closes on the lows, it doesn't mean that the market's going down. It's about how the market digests the sessions after that. So this is a Friday, non-farm payroll day Friday, 1, 2, 3 days of digestion. And finally, boom, we're up and out. And we never really look back. And this is where we are. The problem that we have right now, this is one where here's a non-farm payroll day up here, where this is July, I believe.
This is when we topped out. Yeah.
These are fundamental. So non-farm payrolls are a fundamental event that absolutely define your technical levels for the market moving forward. So it's not a backwards looking thing. It defines the technical trend of the month, every single month moving forward. So it's very simple. You don't need to overcomplicate it. But again, if you're inside the box, then you're not trending yet. It's not until you finally get up or through. So up over, you retest, we're getting, but this day you open way high and you close back in, you cannot think that you're continuing. So, right. But what's true is that more often than not, that day defines actually the whole month's high or low range. Like, I mean, 100% of the time that defines the month's trend, if you will. And then it's, again, if you have a day where you're opening above or you're opening below, this is a below, then we're just going down. And where do you go down to? This is where it's important to have this kind of historical data. You go down to the very next non-farm payroll kind of level, and that's exactly what happens. But you can look at this on any time frame. We'll release this sooner than later. You can basically display however many non-farm events that you want, but this is true literally forever. So this is another one. When you're in the box, what we're looking for is we're looking for a clean open and close above or below whatever that Friday's high ends up being. This is one where we stayed in this exact range for a full month, and that can happen. But just know that if you're in the range, you're in the range. You're not actually out. And then we have another print that comes out, and then finally, okay, we're not able to get back above. We come back down. Where do you go down to? You go down to the lower one. And it's literally this simple. You can back test this. This is just a visual back testing. How important these days are whenever it happens. Every time that I have one of these kind of boxes, this is exactly what it is, right? So this coming Friday's range will really define what the trend is for the rest of the, at least for October, for the rest of the year. The thing is that unless we're over this 496 on the Qs, or really that July NFP, that whatever it ends up being tomorrow, if we're trending higher, this ends up being that upside target, 496. Right. But I'd like to see the market get over that. But this resets pretty much every month. And when you have a big range like this, it's possible that, the market moves through these ranges pretty fast. So that's why you get this kind of flush or press up through very quickly whenever you get these kind of ranges.
Okay. Can we start off?
That's where we are, like super critical mass. This is the 2-week pivot right here. If we're over, it's literally right here. We closed on it, man. It's this.
Yeah, no. And these numbers are going to be really important. Then we got CPI a week after that. So all these numbers.
Yeah. So this week, and even this, we have a little gap right here. It's 480s, give or take on the Qs. Look, if we can hold above this for the next few days, or at least through next week, I say if we can hold above 480 through next week, like that's pretty bullish in general. But really, this coming Friday's print will definitively define the overall market trend, hands down.
Right. Okay. Can we start off with a stock that has closed above 37.50 today?
Did you see my note? I sent a post on it today, but Peter Thiel's done. right?
Apparently, Peter Thiel is done selling. Correct.
Peter Thiel's done selling. I think that helped press this guy a little bit. Did you see what's up with the filing? Do you know about that? This secondary filing, 6.5 million with Lilium.
That's a long time ago. Do it.
Was it? Okay. I just want to make sure. I didn't know.
That came out just now?
Yeah. Or yes.
I'll look that up. But yeah, I don't think it's too important, but I'll look that up.
I didn't think so either. This was yesterday. Lilium files registration, secondary sale of 1.5 million shares of Palantir. It didn't seem to be that big of a deal, but I did see it and I was like, But I think that Peter Thiel, remember when Jensen's like, hey, Jensen's done selling and NVIDIA goes to the moon. It's just another reason.
Man, and the Peter Thiel thing, it was scheduled to about $1 billion of stock, but apparently because he sold up to that $1 billion, now he's done. That's the argument that some articles made today.
Yeah, no, but I think it's just more good. It's just more good commentary. I mean, I really wish that every stock could act like Palantir, man. I don't understand. Like, it's hard to find a stock that acts this well, even in the general turmoil of the market.
We found a decent one. It took 4 years to figure this one out, but we found a decent one, man.
But okay, so it hasn't always been this way.
Oh no, it absolutely has not. Last time Peter Thiel sold 20 million shares, we were stuck at 17 for like 8 months. So this is a different level of momentum around it.
So I will say, I'm just looking here. We have a pretty clean trend. So this is just the most recent channel. So we would call it a channel up, which means that when you see a stock that has a clean channel like this, typically when you're at the upper bounds of a channel, in this case, it's going to be around 40. You would expect it to have a pullback somewhere around the near like low end of the channel. Palantir, like this is similar. So you're right on the center line. I actually think that this does see 40s sooner than later.
Did we just get a 40 prediction from Paper Gains? Did we just get
in a near term 40?
Wow.
Yeah.
Okay.
Not even a long term 40. And then, you guys have the $50 price target, which, is a measured move, but I don't like to make a legitimate prediction that far out. But if Palantir can hold at least the center line right now, that's where on a very basic movement, this goes. And it's very basic. It's really not, when you think about it, that's not a big prediction by any means. Quite frankly, it's 3750, right? So like, at that point, what's the deal? What you don't want to see though is you don't want to see this kind of fail. I heard you talking briefly about like selling some calls. I will say, like, I'm with you, right? Like, I will sell puts when I'm actually already buying the stock. I think it's similar if you're legitimately going to sell the stock, planned to sell at 50, and it is 50. When it's 50, then you can go ahead and sell it instead of actually hitting the trigger on the sell button if you wanted to, as an alternative of selling calls. And maybe you get called away, maybe you don't, if that makes sense.
Yeah, it does. So you see a trend line into $40 just based on it maintaining.
Yeah, just very basic, right? So this is center line. I mean, it's very basic into like just under $40, $39.79, $39.80, give or take, depending on how long it takes to get there. But I'll do it this way. One more little bit of a chop. So from here, you would really just kind of connect these highs. It's whatever the tops of this ends up being. So this is your channel, more or less. What you don't want to see is you don't want to see it fall out of this channel. And if it does, in that case, well, okay, so then that's when it's like, that would be that moment. Like if you're worried about it and you're going to sell a little bit anyways, instead of doing that, maybe sell some covered calls if it actually falls down. And that's going to happen right now at 30, just under. So it's under 36. So if you have a daily close under 36, which quite frankly, dude, I've been kind of watching to see if like, is there a short coming? It hasn't happened. You have not gotten a close below that 36. Like you kind of got it just one time, or no, it's not even 30, it's 36.28. So it saved itself. It has not closed below 36, but I will say, if you have a daily close, and here's this 36 level, if you have a daily close below 36, then and only then would I maybe be thinking about it. Not if it's close to 36. It's got to be below 36. And honestly, it is yet to happen. You gotta tag in the morning at around 36, but instantly bounces, does not close over 36 or below. And then even this morning in the pre-market, it ends up being like a little bit of a liquidity grab. So I would not be worried about this unless you start seeing daily closes below $36. I would not even think about it. Don't touch it.
Why do you think it's not falling below 36?
I mean, so a couple of things. Obviously, the S&P inclusion ended up being a tradable event. I think there might still be people getting on the bandwagon potentially, and just the general news flow. Look, when it was down in the dumps, you would have a string of like not so hot news flow. We're not getting it. I think I just overheard you saying something about potentially people leaving, but honestly, I haven't heard that yet. But there's no reason. There's nothing until we have some kind of catalyst that happens. And just being overvalued early on, you would ask me, hey, do I really care if something's overvalued or not? It's not really. Like, just being overvalued is not enough of a reason for a stock to go down. It's just not. Yep. Right. It's like something being oversold or overbought. RSI, it's just not a good reason to take a trade or a position, period, end of story, right? Like, things can stay overbought and oversold for years and years and years. So, it's not enough of a reason for me, unless there's something fundamentally changing. But honestly, where we are is like, they're just getting like that, like Goldilocks type of news flow. So,
right. I agree. I think the media is catching on. I think people are excited. Forbes used Alex Karp in their thumbnail yesterday. like Forbes would use like Elon or, like they used Alex Karp. Like that's, it's one of those things where people are getting interested. Okay. Can we do Robinhood?
I'm thinking I should add. What day is
dude,
that?
I added. I think,
did you?
I think 20. You can tell me if I'm wrong, but I think 22 is strong support, and then mid 22s is like
what's on here. It's 22.19.
Exactly.
So like where we are, right? You can pull this level across also, right? 22.19. This is the same thing right now. We're not getting. So I hope, because I have a much larger Robinhood position than Palantir, unfortunately. I hope that Robinhood can turn into like, why can't Robinhood just trade like Palantir yet? But
Robinhood's way more contingent on the market, Bitcoin, all that stuff, right?
Maybe. I just, you know what? I don't even care what the hell this stock does. I'm never going to sell the stock, dude. I
agree with you, dude. I'm getting so bullish for their future.
Like, I'm just never going to
I want to get to 10,000 shares of this company in the next couple of years. Like,
dude, just do it right now.
Oh yeah, of course. Just put 240 grand right now.
Oversized then.
Do you see 22? Is that good support to you? Do you like that?
Yeah, it's just over 22. I would treat it like this, the same way that we just looked at Palantir and said, listen, we have yet to get a daily close under 36. We have yet to get a daily close under 22 so far. And, this is just about you guys where Amit sold all his shares anyways, or options.
2280. Yeah.
Look, we're still holding, right? I'm still in the Jan 25 calls, right? I did take my principal out. I was really thinking about adding to them today, but I might, because the market's at critical mass right now. I also think that, what I've been doing lately, Amit, is mostly the last few days I've been adding much longer term options on certain things because I still do the intraday stuff a lot. And my style is I like to buy a little bit of time, very short dated initially. And if I can capture that initial move, then I like to take those profits and roll into longer dated things or really just equity, and just kind of like snowball from there. That's my style. And it fits the group really because there's a lot of very active traders. But there are certain things that are setting up here now that I look at, I'm like, I just don't like, first of all, Robinhood, it's a $20 stock. It's really hard to play near dated stuff. I've been buying a lot of March, April, May type expirations. of next year. So I might look into something like that. It is hard though, because the trajectory on this, like I have 25 near term. That's just what I have. And if we take this, this consolidation or even this pullback, I would love to see 30, but like to trade directionally for 30 now,
A little tough until we see that October event. It'll be
No.
tough. Yeah.
You know, it's weird. Did you see? So today it looks like, dude.
What? What'd you find?
I
feel like you just found something.
I did. This is sticking out like crazy.
Well, on the options flow?
Yeah. What the fuck are they doing?
Did someone load up on the options?
That's nasty. Sorry. So we're just talking about this. I mean, so 43,000.
What'd you see?
I'll tell you. Just he's all of it now.
Tell me, what the fuck did you see?
43,000 calls to 10,000 put. That's a bearish skew, right? Put call skew. IV percentile is 37 percentile. It's not horrible. Anything under 50 on the IV percentile is good. Or is fine. 10,000 or 11,490 options traded on January 16th, 2026 at the money strike, $22.
I mean, that's an easy call, bro. I mean, I can understand why.
So I'm looking at this now and like, you know, that actually makes sense. Even as a stock substitute, that does also make sense. So if you're not familiar with a stock substitute, it's like that's optionality to get long there.
Because you can exercise the contract as well.
Yeah, you can exercise the contract, but if you own, let's say, 100 shares.
What movie is that from? You're not ready for the truth? What movie?
Well, here's the thing. If you own 100 shares and you're actually worried about it, right? If you own 100 shares and you're actually worried about Robinhood going down, having the January 2026 $22 at the money calls is pairing off your risk at the same time. Meaning, you know, that's $2,200 for 100 shares, or it's $670 for a synthetic equivalent. We call it synthetic equivalent.
Correct.
So it's nearly equivalent. It's equivalent to 68 shares is what it is. But yeah, it's not horrible. What was that flow that someone just sent?
Hood 35 call November 15th, 5,431 calls.
I don't see that.
Is yours updated every single day or as soon as it
is? That's not there.
35. I'm looking at that call. No, there's 6,000 open interest that I see.
Open interest doesn't matter.
Different than
right?
someone buying. Yeah,
so open interest is nothing burger. Forget about open interest. When you look at the January 2026 option contract, go ahead, pull that up right now. Can you share that?
I can show it on my phone real quick.
Yeah. There's a difference. There's a massive difference between volume and open interest. Open interest is nothing burger. Don't even pay attention to that. If you see like long-term open interest, then that's kind of like, yeah. So see where it says volume on there versus open interest. So tomorrow, if you guys look at this contract and there's 30,000 open interest, that means that these guys still have it. Right. So volume is what was traded today. Open interest is what was owned coming into today. So like people are already on that November series. That's the expiration. The series is called as the expiration. So you have like 28s. They're all over. They're mostly on 28s in terms of open interest for that November series, which also is. Dude, it all feels a little stretched. I honestly, dude, I'm just happy to be long the equity here because or something longer dated because it can get really choppy, kind of like Palantir has been choppy, right? Like if you own short dated options on Palantir, it might be a rough ride. I don't know. I don't. But things like this, I would suggest like a lot more time.
Right.
But yeah, way more time than you actually think that you need. So if you think you needed, 6 months, then you might want to be buying a year out on something like this.
Okay, can we do Tesla?
Tesla. I was actually looking at like trimming some Tesla. So we got the delivery numbers today. I don't think the delivery numbers were like anything crazy. That was slightly higher. Somebody had a comment today about the energy numbers not being what they were.
Yeah, energy was down quarter over quarter, but it was still up 73% year over year.
Still up 73%. Okay, so that's probably the biggest reason, because first of all, it wasn't a huge beat, right? I think China better, right? China was better, but net overall, it's just very small. You know, we are in a box to me. So like right now, so this green box ideally is done, but needs to move up into this. See this consolidation right here. So we're looking here. I pull this across right there. So right now, this is kind of the lows. I feel like I wanted to see this go higher, but it didn't make a new high. That was the thing. So it didn't make a new high. Can it take another shot at it? It can. But if it does that, in order for that to happen, it has to hold right around this 240 level, right? Like it's possible that it pulls back for like a day into that.
Don't you think this was very sensitive? Like it's been in such a good trend, and then boom, these numbers come out and it tanks 5%. Like I didn't expect it.
Tesla trades off that, right? It always is that. So it's about how the market digests it, right? So the intraday move. So it didn't close on the lows, I don't think. Yeah, it closed off the lows, right about halfway. So this is the intraday view on Tesla. If tomorrow we're not holding, really it's like this. Let me take this down. So here's yesterday's low right here. And if I draw that straight across, if this was a daily candlestick, like that's exactly what it'd be. This is that wick of today or of yesterday's low. And then where we closed was just barely over it, just barely. So tomorrow is kind of an inflection point for Tesla. If it cannot hold yesterday's low and we're like definitively breaking this, okay, we're going lower. And honestly, I don't think 235 stops in this point. I think it's like a slow trudge to like 225s. Sorry. But this is the 20-day simple moving average that we're going to run into. Right here, there's like a little gray line, but there's a purple line here that is pretty important. So this is a 200-week simple moving average, this purple line here. So hopefully that defends. That's gonna be around that 235. I think it can get kind of choppy. So the reason I'm saying that is if this is the 20-day that's here, the 50-day is here, and then the 200-week is here. So I think this can create like a real choppy kind of situation, which in this event ends up being around 225, 230. And there's a bit of a session gap, and it's only for like a blink of an eye. If that, there's a session gap right down here. So I wouldn't necessarily trade for that unless it's a day trade. 229, sorry. So 229 right there. If you see it there and it starts getting bought up pretty quickly, I would actually expect that it gets bought up if you see it there. But I think that would be the low that it needs to defend in order to continue this trajectory up. But for now, I don't want to be pressing any near-term bets for a couple of reasons. One, for sure, because the volatility is pretty high up here. Unless it's just like a very small shot, like a pot shot. But yeah, don't bet against Elon. Look, we still have these two catalysts coming. So today, I think ends up being a bit of a bummer move, but I think it gets bought up pretty quickly in anticipation. I think we're going to have another quick push right ahead of 1010, and then that may be a sell the news, and then we get another quick push right ahead of earnings.
So how would you play it right now?
So I would be net long, and then I would just be looking for dip buys. I would play this very similar to NVIDIA right now, is we're like, I'm not trying to press ultra long-term bets. I have how I am playing it right now. The only thing I have left is a 225 calendar. So are you familiar with those?
Yeah. You told me about this.
So I opened it a long time ago. Actually over here. And then in addition to that, I opened up a butterfly, which I closed yesterday, which was good. Like that was golden. But the calendar pays me all the way up to 275. But what I'm going to do right now is that if I see Tesla come down around that 230 and I start seeing it get bought up, then I'm going to take down my short call for November because it's a November, December calendar. So I'm long December 225 calls and I'm short November 225 calls that are now like pretty deep in the money, but but the whole thing is up because IV is so high and I'm just getting paid to wait in the meantime. And
but you wouldn't be buying a $300 call for 10-11 or anything like that's scary to you.
I think that's,
do you think the seller of that call or the buyer of that call is going to win if you have to bet?
I think that if you time it right, and I hate to say that, if you can get them around 230, then you're fine.
Your friends at Goldman Sachs said we should have bought calls yesterday on Tesla, you know?
Well, Goldman Sachs really doesn't have a good track record on that kind of stuff. No. Like they really don't. They do have a good track record on like hedges, but not the long. Whoever's on their long desk is just not. They don't have a good track record there. But it's this level, right? Like honestly, 250s. If we're over 260s, like we're going, right? And if you want to be like crazy long, the options chain has been targeting 300 for the longest time in that January expiration. So let me see, 300 calls. I mean, they're sitting at 1,500 right now a piece. Quite frankly, when I was looking at these, they were like $400 or $300. So they're 1,500 right now. So I don't know what to say.
So let's answer this question. Spartacus says, I bought 3 more Tesla $300 calls for November 15th at 600 a piece. Am I cooked?
Are you cooked? I mean,
I don't love that, by the way, but that's because I don't know if we crack 300 that quick.
Yeah, it depends on how you trade it, right? If you're someone that literally just trades the premiums and how you're exposed right now, like here's the thing: if he bought them yesterday, like he
said today, he bought them today.
I know he did say today, but his cost basis might be 200. I don't know. He might have just averaged up potentially.
But hopefully. You would need to move closer to 270, 285 to even be able to sell them back for some profit, right?
I see them at $8. Hang on.
Spartan says I'm trading the premium for the volatility.
Yeah,
I hear down. Oh, he did say he averaged down. Yeah, he averaged down.
I hear what he's saying. I am gonna have to call a little BS on that though, because they would never trade it for 600 today. Love you, bro. But I mean, if you did get they were 625 first print in the morning, maybe 618. So you could have been gone close. Like insta deep down here. So that's a decent snipe. If he did snipe that, we call it like a sniper. And quite frankly, that option contract, the low's like 300 recently. So it's not horrible. He might have to trade around that core position, I would say.
Oh, he said November 1st. That's the difference.
Oh, yeah. Okay. So November 15th is, yeah.
Yeah. Okay. So November 1st is a little bit tougher because now you.
I do see, there's a lot. So I see a lot of, he has options on that for sure. So, there's a lot of volume today on the November 1st $290 call strike, more volume than there is on the 300. So what I would say is that if this goes against you, it's an easy move to me to go ahead and sell a 290 call and turn that into a call credit spread.
Yep.
And recoup all of that and then some, if you have the margin to do that.
Okay, last question on Tesla, then we'll go to NVIDIA. Is there any world in which the market has priced in the taxis? Like they already kind of know the news and the run to 260 has been that?
So I think the anticipation's about we're looking for, I think the market's looking for for the robo-taxi to be a different car.
That's people really can buy? Like,
yeah. So like if you can, I don't even think he needs to say that people can buy, but if it's a different form factor, if I'm using the right word or not. If it's a different type of car, like if it's a different model altogether, just that second, the market's going to get excited. Without him saying you can buy this, he doesn't need to say that you can buy this. Actually, It might even be better if he doesn't say that you can buy this, because then the market's going to go wild on like speculation. And so I think the less he says, probably the better in that regard. But I think the market, the second, if there's a big, like, I don't know, sheet with a car underneath it, then the market's just going to go wild. Like, absolutely.
So here's the question. Do you think that new car form factor, $25,000, $30,000, whatever it is, will actually be available for people to buy? Like, is that the Toyota Corolla competitor?
Well, I don't know that it matters that much. Like, it might end up being like a hood moment, right? Because like when Robinhood launches this new app, I'm looking at this as net new line of business, right? Like a net new line of business with the new Robinhood app in terms of SPX options and futures that could be fairly significant from a revenue perspective. I think that just the speculation of a new model is that same kind of thing. It's like that net new line of business potentially that honestly we don't really care about that much. Like we do, I think like FSD and AI in general is like really what it is. The worst thing I don't know that I just hope he doesn't like take over the whole thing with Optimus. If he does, okay, maybe I'm missing something, but yeah, FSD, I think there's a lot of stuff that that the market's looking forward to. Like, do they, don't they partner with Uber? All that kind of stuff. Can you just buy this car on your own and instantly have your own small business?
I think that's the dream.
Yeah, that's kind of like the dream. Like, would you buy one, Amit? Like, and never really even drive it?
Yeah, I mean, dude, for 25, if it's actually 25,000,
would the rents let you plug it into the garage and then just be like, hey, I'm going to turn on my business real quick, flip the switch and start like having it do the robo-taxi pickups? How wild would that be? Does that not just change the entire economy? Like,
it changes it overnight, but there are regulatory hurdles. There are,
for sure.
There's a lot of stuff. My dad wanted to get a Tesla a couple months ago.
But it's the dream, right?
It is still a dream right now until we get specifics. But
for your dad to get a Tesla?
No, not for him to get a Tesla, but for it to be a literal small business by owning.
Yeah, for sure. Unless you get like a fleet. What happened to what was that? Turo?
I don't know.
You remember that company? TURO?
I remember a little bit about them.
Oh, they were like that. You can buy a car. Yeah, there it is.
Wait, no, I know these guys. Yeah, I used to use them.
And then you park it, and people just go pick it up. You can get your Tesla right now. Oh, look at this. 100, and you rent the car for a day. They're $190 a day.
Is that expensive?
Is that a lot?
You and me both are like,
is that a lot? I don't know. Yeah. Current location.
All right. Can we look at NVIDIA? It's running after hours. Jensen said
it going?
Is good. Yeah, it's up 1%.
All right.
People are
look at this. Why is it more expensive where I live, dude?
Well, you're in California.
These are the
Silicon Valley. Of course, you're gonna.
That's bullshit.
It's the world. It's you like the California sun. That's what you get.
I need to get out of here, man. All right, NVDA. So we went over NVIDIA today in a like impromptu stream. So I don't know if you've been on them or not. Like, there are two spots that I was looking at for NVIDIA, and that was when we were up here. I actually posted on my timeline. This is the top of the range, and I think some of your followers probably saw it, and I was like, "Do not chase this." Literally, do not chase this. Where we landed, to me, there's two levels, these white lines around 115, and then also around, let's call it this area, like 109, give or take. I think this is done, and this has already happened, this level here. So for now, what we have, you don't really need this. What we have is a consolidation. That's just what it is. So here's your consolidation here. This could take a while, but when you're in a situation like this, look, you really don't want to press your bet. Since the beginning, we've always said you want to accumulate under 123. 123, by the way, is $3 trillion market cap. Finally figured out why that number was so important. But at $123, that is $3 trillion of market cap for NVIDIA. So that's why
123 has been a psychological number too.
Yes. So get that right. That there were certain weird things that were happening like that with Apple when it was at like 2 trillion and stuff like that too. But when you see a situation like this is not when you want to press the bet. Hopefully you guys have been watching these sessions long enough to know that if you are, what you're looking for is you're looking for a little breakout and a retest and hold. But you never really want to press it when you're literally like this. If anything, you actually want to trim because you can get a pullback. And if we were going to see a pullback and this was actually going to have good chances to do that, it would have hit that 123 and continued on like this. But we didn't see that, right? What we saw was actually like a fail. And then the very following day, failing below. And so like, let me just pause this for a second. Stop. I didn't stop. Sorry. Anyways, but here's that first dash line at 115. So there's two things. The other thing you probably should have been learning is about these simple moving averages. And when they're incredibly tight like this, so that's the 50 and the 20 are both like literally sitting on top of each other. It's good to note they can act like dynamic support and or resistance. But the biggest way that you want to utilize these is when the distance between them is getting wider, right? So like when the distance between the 20 and the 50 day are getting wider, that's when you know like, hey, look, I want to be in this trade net long because the velocity is increasing. And the second that the reverse starts happening, the second that the distance between the two here starts shrinking, that's not when you want to be it. They can act like I said, dynamic support and resistance, but it's really about the distance between these two. So right now, the distance, it's very, very tight. So I expect the range of NVIDIA to get tighter and tighter and tighter until ultimately we have a major separation of these two. In the meantime, what can happen is that this can get like a crazy whipsaw. This can instantly pull back down and retest the bottom of this range. So what I would say is I would not trade for this here. It's kind of like a Tesla where it's like, I want to be net long. But if I see an opportunity down towards the bottom end of this consolidation, that's when you're going to have a better risk reward to get long, to get net long. And so like here, like if this were just to come down and breach this just slightly and come back up in, that's a long right here. And so that's going to be around that 110. And that's your best risk reward. But does that happen? I don't know, right? Like, so number one, don't trade for it. If you see that happening, that is the opportunity that you're looking for to continue to add into this position. Otherwise, you want to stay net long and let this play out, but you don't want to press any kind of crazy bets here now, right? That's just not how you want to play this. Right now, you're running into a little bit of, again, dynamic kind of resistance. Let this consolidate. This may or may not go. Look, it's not over yesterday's high, but it's also above the low. So it's stuck here now. So here's that low. And then here's yesterday's high, just underneath that 123. So even, let's say from here, then what could happen, why I wouldn't want to press it is you can hit like this overhead line and then boom, have this instantly happen, right? And then this ends up being your better long, just like that. What you would need to see definitively if this is going to happen is you still need to see this push over. Then you need to see that 123 hold. Then you want to see a little bit of a break. And then you want to see this hold, right? I'm going to go to a different chart similar to AMD. So remember, we talked about this just as a comparison. So connecting these two lower highs, we have that little breach, and this is the moment, right, on AMD right here, right now, that you want to see NVIDIA kind of do. It makes a quick push. This is not a long. That first press out of that consolidation, it's not a long. The big long is setting up right here, right now, if this actually happens. So 164.50, give or take, is actually a prior high from over here. Pretty key pivot. But sitting on the 200-day simple moving average, retesting the prevailing downtrend, two things can happen. Either AMD starts to go higher here now, and this is a big long. This is like not a small long. This is like a big money long. Because this is like a Tesla at 190. Then you're going to break out in strength of this prevailing downtrend. Or what happens is that this fails lower, just anywhere lower than really like today or yesterday's close. And then you're right back into this downtrend. And that's also a big short. So this is a trade right here, right now, that's setting up as we speak. I would default to longs because we can zoom in here. Look at this, where we are. This might be something that you hammer tomorrow. It really might be. So, this red line is the 200-day simple moving average. You got this low here. If today ends up being a higher low from yesterday, and I mean, when we get this microscopic type of precision, this is what I'm talking about. This white line, this is how precise a high frequency trader like myself is. We are like this. And now with the microscope getting in on this exact level, which, I'm just going to tell you right now, it could be pretty important. This right here, this is at 159 and change. You need to see that hold. If we can push over and look at, like, I can just pull this level straight across. This is a big deal, right? So there's a good amount of support in this area or at that level, at that price point, that gives me some kind of confidence where, like, it's possible, look at this, that we can get a pretty explosive move on AMD in either direction, to be fair, to the upside or the downside. So this is one, let me see, does AMD have a catalyst anytime?
I don't think so. I mean,
so earnings October 19th. So we're right in that roughly 2 to 3 weeks ahead of earnings where you could get a pre-earnings kind of move. And, in this case, there's a little session gap. So when I look for what we call session gaps, I look for areas with the pre-market and post-market hours turned on where there was absolutely zero trade. And right here, I have one. And so this we call a session gap where there's an imbalance in the market. So the session gap, there was no trade between 177 and right here, 175.50. This is an inefficiency in the market. There's a hard imbalance here. So if we get that kind of press, and then below that, we actually have what we call a low volume pocket. All of this trade, very low volume pocket. See this? Remember, we're looking on the charts. So we're looking for peak to peak. You have this peak to here.
Gotcha.
So if this trade happens, it's going to be breaking over this right here. I think you start trading for that. But trading for that, that's a $15 move. And this is a move that I would say would get filled in like 1 to 2 sessions.
Right.
So keep this one on watch for sure. That'd be like, again, large conviction, like high velocity type move if that happens. So, like conversely, subsequently, there's another to the downside. So the fail of this would take you to another, what we call imbalance in the market. If this breaks down below this level, then it's going to 149. So again, another $10 move in either direction. This is setting up for a big day.
Okay, can we do Google? We'll do it quickly.
Is that your request?
No, someone in the chat. Someone in the chat.
I don't believe you.
No, I swear, crowd control in the chat.
Highlight it. Google. I don't believe you at all.
Look at this. They're sorry, cause why not?
I don't believe him. So Google, same thing. I think you're in consolidation. So it is also setting up. So when it was down here and we were on our Thursday thing. Okay, Cosmo. All right, fair enough. We did say that this was probably likely a tradable level to trade off of on that 150, right? I think you and I were both on something where it's like we were kind of bashing Google, but at the end of the day, you have to say, yeah, it's probably a bounce level, and it ends up being a pretty decent level to bounce. So now we want to see, okay, at this point, what do you do? So at this point, what we're gonna do, I'm just gonna measure this from swing low to swing high. See if I can.
By the way, real quick, Tim Cook just filed to sell 223,000 shares of Apple.
Whatever, dude.
And now, it's not even about Apple. It's about insider selling is picking up. Like that's just objectively true.
We'll see. So from here to here, what happened was you actually hit that 50% retracement. So 168.69 ended up being like that was the target from this area. So I think now, remember, stocks go three directions. They go up, they go down, and most of the time they go sideways. So after a big run, you should expect a big rest, or at least a decent rest. So this run is, let's say, 20-day run for 12%. I think I think you need to let this rest. This is going to rest ahead of earnings. It's probably going to do some kind of trajectory like this, and really be choppy. My gut is somewhere around 163s, and then just before that, just before earnings, rather, it'll make another little press up into this 176 area. That ended up being a really funky drawing. Sorry, but that's going to really line up to all of these simple moving averages. Yet again, they're consolidating. This is something is brewing in here. It's the second that they start expanding in range. But right now, to be clear, they're contracting. So wait for these to get a little bit tighter. I would give this probably a week or two. As an aside, Google likes to move on Fridays for whatever reason. So maybe this ends up being a non-farm payroll thing. Also, like this Friday is going to be a major market event, right? So whatever happens, all this stuff is gonna fire off. A lot of these simple moving averages will start expanding one way or the other. Things can look good when you're in a situation like this. Things can look good, and then all of a sudden turn down. Like this could turn that way. Oops, sorry. Like this is your 20-day, and you can have a 50-day pull down, and then have everything start to look the opposite. It's just we're in the mode where it's best to kind of like wait and see. Again, critical mass at the market, and Friday really comes into a big move.
Okay, can we do
ACN?
Oh yeah, let's do ACN. So why is Accenture important to you?
So Accenture is important. So coming from Silicon Valley enterprise tech, Accenture is if you don't know what they are, they're a staffing agency at their core. When we come into where the market is today, I just thought it was really hard to try to pick like who's going to be the next application level winner, like Palantir, right? You could have tried.
There is no other application winner
today, right?
Like, no, it's Palantir.
So that's
Jason.
my
We're
point.
done. We figured it out. It's Palantir. We're done.
You're making my point though, but there's going to be a lot of other people that'll try to build something, right? Yeah. It could have been Snowflake. It could be Databricks. It could be whoever. It could be a company that we've never heard of. But the one company that we know will definitively capture that right now is Accenture. It's almost like buying NVIDIA because you don't know who the next AI hardware leader is going to be, but because NVIDIA is going to be a player no matter what. Like no matter who it ends up being, it's very similar where Accenture is going to be a player no matter who ends up winning in this regard. For Accenture and staffing agencies and enterprise technology, we use them. I say they're used for what would be called like a transient skill set, or like something that's not always there. Like if you needed to build a net new environment, or if you needed to manage an existing environment, but there are two reasons to use an Accenture. One, it doesn't, and this would be like historical. One, it doesn't make sense for your company to spend the money via manpower to man that site from a full-time employee perspective. Or two, like that skill set is something that would better be suited to be offloaded. Or two, you just don't have that skill set in-house. And when it comes to AI and AI infrastructure and coding, things like that, because it's such a new technology, most of the time you're just not going to have that new skill set in-house. And so where do you go? You go to companies like Accenture specifically. And there's only like one or two in the Valley, Silicon Valley, but Accenture is the number one.
Their headquarters are in Ireland though, right? Not.
Yeah. But dude, I'm telling you now, right? Personal experience that Accenture is the company that owns like, they're literally everywhere. So if you go back and you see like where did the like raw talent come from, most of the time they got their start in Accenture, right? So
It's like
Accenture-
McKinsey in training people to an extent.
Yeah.
right?
So if you're new and you're trying to get a foothold into the industry, where you go to Accenture, and you go and you get there, and honestly, it's just this breeding ground of talent. And so this is the talent pool for Silicon Valley. It really is. So I think to that end, it's hard to pick the, endpoint technology that's going to win. But definitively Accenture is going to get a piece of it at the beginning, right? No matter what, right? Accenture is greater than Casting Couch. You got the wrong symbol there.
Dude, I had a ton of friends who got accepted into Accenture as consultants.
Yeah.
And, I never went that route, but
it's like the standard of how you get started.
I know, but a lot of them were miserable there because it's boring. Like some parts are exciting.
Maybe you get lucky, right? It's the if you get into a crew that gets to go to a great place to go and actually gets to do cool stuff. Half of them, like I said, there's 2 reasons to use Accenture. First reason is that transient skill set, historical reason, that people don't want to have their full-time employees doing the work, so they just outsource it. That's like managing existing environments, or it's a net new skill set that you just don't have in house and you need to find talent. Right? And so that ends up being.
If you're working on a really interesting, fun project, if that's what you're working on as a consultant, then it can become a really fun job.
Exactly. Yeah, and most of the time, just like Deloitte, just like Robert Half, but
KPMG, PwC.
Yes, but for Silicon Valley, I'm just telling you, the firm is Accenture. It's not any of the others.
Gotcha.
There you go, Brian. No, you did it wrong. Wrong way. All right, fine, whatever. We're still waiting for Netflix X. That's all I know.
Oh my god, dude! I asked people today, how does Netflix go to $1 trillion in the morning, and they said buy DoorDash. I was like, huh.
Whoa.
Netflix and DoorDash.
Have your popcorn delivered for your Netflix.
Okay, so you want to do technicals on this or?
So here's his investing. I think this is 450. So I ended up buying this recently on the 17th of what is this? On the 17th of September, just before earnings, because I thought it was going to be breakout. So below 340, as low as 300. Not planned as a short-term hold. Not a short-term. This is that channel up. This is a weekly view on Accenture. I'm looking for 450 plus.
They did $1 billion of Gen AI sales in the last quarter. So
yeah,
AI is a tailwind.
That grows. I think that goes I think that continues that trajectory.
I mean, with this NVIDIA partnership, you would imagine it.
Yeah, exactly. So this is, the thing is, I don't know that it breaks through here now, but I think that you at least get to this, right? And if this ends up being the consolidation, this is longer term, obviously. Then this is how I get to 450. This ends up being a little bit of a breakout. Let's say it gets here and does a little struggle, finally stutter step, and then we go.
Right.
And that's what I think this chart's going to end up looking like in the next few months.
Okay, can we look at Chipotle? We haven't looked at that in a while.
Oh.
CMG. Are you long this one at all?
Yeah, a little bit equity. I like where it is. Oh, it's actually looking better. Should I add right now?
What's the price? I haven't looked at this in so long. Chipotle.
So this is coming into earnings. I would just keep it where it is. It's going to be kind of a coin flip when we get there. Here's the thing, you saw Nike. I think it could be similar. So coming into earnings, it's possible that these guys remove guidance, right? So the CFO is still at the helm unless something's changed. But I like the company. But whenever you have this kind of leadership change, it's possible that they end up pulling guidance to set the stage better for the next, regime or whoever. But at this level here, this was the level that I really want to see it go. This was more like December 60 calls for the options trade. We're getting a little close, too close for comfort at this point to be opening net new. And the strikes, yeah, they're still open from the lot size. There's still 5,000 open interest, not a lot trading right now, but that's really the targets. And it's this volume shelf from this shelf to this shelf. So you're basing over here, over this right now. So you want to see this really reclaim. So as long as this can actually continue higher, we're right now you're in rest period, right? Rest zone. This ends up being a decent look, but again, the market can take it can take a turn for the worse on Friday, and we'll have to see how the market digests that. So this is one where it's like I'm happy to be long equity here, but at the same time, it's like this is a slow mover, but I would say that your targets for any push to the upside should be 63, and just know, like, if it fails, then the area to be looking at is back into this prior consolidation, which honestly, it wasn't that like long ago that we're here. Right. So I would have no problem. I don't think so with this type of consolidation here. I don't see this, even if earnings is a shit show. I don't see this completely falling out of bed. Like, they'd have to give you a reason to throw this company out of the door. And quite frankly, if they did that, this would probably get bought up the very next day. So I think you're just long and patient.
Can we look at Rocket Lab? Because this thing actually exploded.
I bought some more.
Okay, so you're on the Rocket Lab train. So what's...
I thought you were... Did you not?
No, dude. I have like...
I texted you whatever, dude.
You bought it what? $9, $8?
Again.
Okay, so why? Again. Why are you buying more?
Okay, so this move today was I finally have a 200-week simple moving average that showed up just the other day right over here. But it was so it was twofold. What I'm going to do right now is I'm going to take a horizontal line and throw it right across. So remember, whenever you have these like series of higher highs and higher lows, where's the lowest spot a higher high could show up or a higher low could show up? It was in a very, like, call it parabolic trend. It was literally right here. And look at this velocity.
It was, dude, I saw this was last Thursday. We saw it go up like 30% in front of us, and it was insane.
Dude, like, yeah, but dude, just do it. Go. So what we've done, I've made a horizontal line all the way across the screen. So it's going to go all the way to before Rocket Lab was a stock. Now, let's watch this. Now, same line, 880. This right here was a critical pivot, and this entire area is a massive consolidation. So if it's holding, quite frankly, if it's holding over this area, 870s, and see this volume shelf right here?
Yeah.
It's all of that down to here. Right in here.
Yeah. This
ends up being that major. So now I'm using this area as my, like, what should show up as new support. So if this was prior support and then resistance, which I'm assuming it may have been resistance at some point. Yeah, this like whole overhead supply, overhead resistance in here. I think that just goes.
So let me ask you a question.
I don't know, right? But like it's a simple area of like, I can do this. If it's below that, okay, it's going back down. And it's probably going back down sub 75. But if I want to lever up a position, here now is where it could get pretty explosive. Similar to like what was Palantir's like explosion level? I don't know.
Yeah, but see, here's the problem here. Palantir had fundamental catalysts that had it explode. Obviously, S&P being a big one. You're buying it in these $8 range because it's holding above that level. Are you not at all afraid that this big of a move, like from a technical perspective, is this big of a move something we should not fight the trend with, or should we be a little nervous about?
No, I wouldn't. What you mean? Like, do you fade it?
Yeah, like if a stock goes from 4 to 9, do you get cautious, or do you say, "Oh, this is the new normal. It's at 9." Is my question.
I mean, I guess it depends on your entry, but not really, right? That's like okay, if you got Robinhood at 8 and it went to 10, or what was it, 8 to 12? You have 50% gain, right? And then it had made this round trip from 12 to 8 to 12 to 8 to 8 to 12. Like I don't know how many times, right? Like you could have.
No. Actually, when it went from no, you're right. Yeah, July 2023.
I remember because I was doing it. Right?
July to December 2023, it went from 8 to 12, 8 to 12. But after December, it took off. and it never saw 8.
Yeah, but like here's that 12. So like 8 to 12, 8 to 12. I don't honestly, and it was even 8 to 10. Like I would buy like every little dip down here. And then while it was in this still consolidation, I would actually trim a little bit until I finally I was like, no, I cannot not like we're going here. And then when we did this, it was the same it was a similar story. When we did this, here's the thing, Robinhood, you could have said easily, look, in the span of 30 days, the stock was up 63%, right?
This was what time is this? This is
November 2023.
Okay. Yeah, you're right. Yeah, got you.
Of 30 days, it was up 63%. Could you have sold everything and gone away? The question at that point would be like, well, would you have bought back?
Well, but I have a different perspective. From November to that time, those 30-day period, there was catalyst that like the simple catalyst was crypto was back. So it made no sense to sell if you knew crypto was coming back. For Rocket Lab, I'm just a little confused. What is the catalyst to keep it in this range? And I don't think any of us have an answer to that.
So I think it's just like, so they have the deals that they're doing, right? Space travel or whatever. And I think now what are their two, they have the 2 models or something.
Well, the big thing is Neutron. That's the big thing.
Neutron, right? So like Neutron, when does that release?
Well, no one fucking knows. Like that's the thing.
Yeah, I think that's it. So like if you get the Neutron catalyst, so here now, I think so first of all, earnings are coming. So I think there's a little speculation on do they put some hard dates around that? Do you want to tell them the story about Neutron? Like what would happen?
I don't know shit about Neutron, dude. I don't know anything. That's why I'm surprised you're buying it here, because you don't know anything about it either. But you're seeing the trend.
No. I'm just like, this is momentum, right? I can trim it, right? It's the same thing. Like here we are. If I get to this, whatever, I'll trim. I would tell you right now that the option chain, when I looked at it, for whatever reason, is targeting like $17. And I don't know what's brewing. But it's
you know what I think it is, dude? I think it's ASTS that's up like 1,000%, which is another space company.
So it's a squeeze setup. If it gets to 17, I think you're out, right? Or at least out half or something like that. Or you take your principal out and you just forget about it, right? Let it do its thing. Yeah, Neutron, I think it was
it's either a squeeze because the short flow is 18%, or it's finally catching a bid like the other space companies caught this year.
Yeah, right. So I think it was, what was it? It's all the shenanigans about like, EPS being low or whatever, right? Like the expenses increasing. So here to here, but it's like a Rivian story where like, if this new model comes out, right, and then my cost basis is like completely different, then my EPS is going to go through the moon. So I think it's just like rhetoric.
They're close to profitability. I think they're 2 quarters away at best from profit, and that's like a big catalyst for 2025.
Yeah, so it's all that, right? Like right now, so as opposed to Rivian, well, we could look at that too if you want to, but like Rivian lost a little bit more than the street expected last quarter, and the next quarter, this coming quarter, the street's kind of expecting them to lose less. So if they don't beat that, then Rivian could be in the dump, right? If they lose more per model, it could be really bad.
What do you think about the market cap? You think that's a little juicy spot, 5 billion?
Yeah,
even if we don't know anything about the
like things go from like 5 to 10 pretty quickly.
Yes.
Exactly, yeah. And then to 15. But once you hit that 20 mark, you're like, well, okay, you need to be a real company. Like you need to be legit. But underneath 20, then you don't have to be that legit.
Dude, dude, we're talking about multi-billion-dollar companies. Like most people will never start a multi-billion. We're like, if it's 10, 15 billion, you can invest in it. It's not a big deal. Actually,
I'm just saying, they're all story stocks, man.
Also, I love the founder, dude. I love the founder of this company. And
I haven't heard. I have to get on the calls and stuff because I haven't actually been like.
Dude, he literally said, "When I have a tough day, I go home and I stroke my rocket." He said that on an interview. How could you not invest in that guy? Like,
that's money.
That alone is my thesis, dude.
I mean, if they can, if the public can get behind them, I mean, that's a big deal. So revenue is like it's actually expected to be lower next quarter. So yeah, I mean,
I also am a little afraid about dilution, bro, because the stock's up a lot, and any day they could put an at the money offering, and they did it already 7 months ago for 300 million, which was not fun. I don't know if they need to.
I mean, 300 million is like when that stuff happens and you have like a dilution event. Look, 300 million on a $5 billion company.
What, 7% of the market cap? That's a little bit.
I mean,
a little bit, you know.
Yeah, but dude, this thing is up 7% today.
I know
It was 5% today. So
I think the short. I think it's getting squeezed. I think that's what's happening. I think. That's
I'm in for the squeeze.
Okay, so let's talk about SOFI.
I'm in for the squeeze, man.
Because maybe SOFI gets a squeeze as well. So let's.
What's the short float?
Dude, SOFI is 18% short as well, just like Rocket Lab.
I think that SOFI is going to pop on earnings. I'm pretty sure of that. In terms of rhetoric, I still think like net, I feel like SOFI is just in an accumulation phase. Like I don't feel like it is. Like this stock has really gone nowhere I mean, it's a fracking barcode. This stock here is Robinhood at $12, right? Like that's what it is. At some point, like we might get a push and then you might get a big sell off. But this is a weekly scale, by the way. I think this was IPO.
IPO was at like 20 something. Yeah.
$10.10 first trade. We're low. Low of the first week.
Well, it's SPAC'd, so it was $10 because it's SPAC'd.
Yeah, there you go. Yeah, well, I think that's it right there. It's SPAC, right? Like, there's no warrants, right? Are there still warrants?
They did some convertible debt a couple months ago. I don't know if that means they have warrants outstanding. I don't think it's an issue if they do.
No, they should be like fully de-SPAC'd. But yeah, I think this is gonna get a little run ahead of earnings right now. I think it's this level, right? So 779.
Oh, by the way, I bought I don't know if you know, I bought 100 spreads for $15, $20, Jan 2026. It's a $3,000, $3,500 position. It turns into 50,000. So it's a 14x if SOFI goes to 20.
No,
I'm not expecting SOFI to go to 20 in a year.
Stop doing that. Stop doing that theoretical value. That's
no, but it's true.
It's never true. It's never true. It never.
No. Well, I mean, dude, the risk. If SOFI needs to break out of this 3-year trend that you're talking about, the
2026.
Yeah, Jan. It's probably not going to get to 20, but I'll sell before then. But if the move is violent off of a 3-year uptrend and people are saying it's valued as a tech company, which by the way, people are saying fair value today is $17, $18, or I think it was $19.44. I think for $3,000 for the upside of 50,000, if it becomes what people are saying,
your upside is not 50,000, but
47,000, whatever. That's the profit.
No,
you're looking at it wrong. It's a $5 spread. I paid 35 cents.
I know that, but it doesn't actually work that way.
If it gets to 20, it does work that way.
No, it doesn't. That spread, if SOFI is at $20, that spread that you own, you bought it for $30.
$35. Yep.
$35. It's all about time.
Well, obviously, but if it gets to 20 by January 2026, that spread is worth $500.
No, it's not. That's what you're not hearing.
Okay, so why? Do the math for me. Why is that not worth $500?
I'm gonna legit do it.
I want to see this math.
It's about time value. So here's your spread right now. What I'm gonna do is I'm gonna open what we call slices, price slices. And you said by when?
January 2026.
Okay,
remember, that's the only option chain with a $20 strike. There's no other one.
Let's say by March of 20, right? It's now trading at $20.
Yeah.
See if I can get over here. Let's say here it's 0. Let's go. This is 10. Let's make this 1250. Let's say 15. 1750. Let's go 5. Delete. Dude, this is killing me that it's not showing up.
I don't even know what you're doing, dude. You're just putting numbers.
I know that you don't know what I'm doing. That's what I'm trying to say.
I'm like very confused.
Reset. I hate thinkorswim. Come on, reset.
That's why you got to use Robinhood, dude. It's easy. Fucking just slide.
The problem with Robinhood is it doesn't show time value.
I get it, but it gives you a sort of approximation.
So my point is that it's going to probably be half of what you think it is.
Okay, I disagree. If it's $20, not by March, by January, when it comes to expiration, it is not going to be half of what it is.
Right, but what if it's $20 by March?
Yeah, but dude, so we've been talking past each other. If it's $20 by March, I'm probably going to sell, and it's definitely not going to be a 14x. But if it's $20 by January, which is what I've been saying, it is a 14x return. And by the way, I don't think it's getting to $20 by March. Do I think it's getting to $20 by January 2026? No, but is there a better shot than by March 2025? Yes.
All
so I feel like that's very asymmetric. If there's 18% short, it's a 3-year downtrend, and rate cuts are a tailwind. Now, does it actually get to 20? I have no idea, but we've seen other stocks do it. Maybe SoFi can.
Dude, this is showing on one of my screens, but it's not showing on others. It's
but you are right. If it's $20 by March, then it's up like maybe 3 or 4x. I have to, obviously let the contract play out to get the full value.
Yeah. So this is your curve, essentially.
Correct. Yeah.
Right.
Yeah.
So it looks like this. So the sooner it gets there, it's only worth that when you actually get there.
Correct.
If that makes sense.
Correct. So you have to hold till the end. Yeah.
Yeah. And so in the meantime, it's like a third of what you think it is.
Yeah, but look, I don't expect us to get to $20 by March. I mean, that's
I know
if that happens,
it does great, right? Like, but I'm just saying theoretical value isn't real life. That was my point. I think you get that.
Yeah.
But it would be a slow grind. Like that would be worth if you paid whatever $30 for them, and if it gets to $15 within, is there time on this?
I'd probably sell at that point. I'd take that 2 or 3x, whatever it is.
Yeah, I have to change. So this is why I like Thinkorswim, is because you can change the time on this, and actually it'll show you the purple line is what's real. Robinhood only shows you this blue line.
But right? Robinhood does do time because you can adjust the time while you're sliding the price, and then it
can you?
100% you can. 100%.
Oh, I didn't. Well, it looks like I've tried. I mean,
dude, I'll just fucking show you right now.
Yeah, but in reality, it looks like this, right? So like it would be worth $149 at $17 if that hits in March or January, February, March, April, May of 2025.
Look at my screen, dude. This is so much more simpler than what you're doing. Here's the price. You want it to be 15.
What the hell is this?
Look at how you've never used this, bro. This is the easiest thing ever. So I said I want it to be 15. Okay. Now, if it was worth 15 today, my contract would be up $9,900 or 284%.
Yeah.
Estimated price would be $1.34. I paid 35
That's accurate.
cents.
That's more accurate. I've never seen this screen on Robinhood.
Okay, you have been a fake hood bull for having never seen this.
This
screen.
is only a desktop version. I've never used.
This is on
desktop.
mobile too, my guy. This is
no,
on
dude.
Mobile.
I can do this on Robinhood mobile.
This is out.
No
yeah,
way.
You go to simulate contract.
Yeah, I know what you're talking about, but like it's a spread, right?
You can do it on any contract, whether it's a call.
No. But no. You have to do on the spread.
It doesn't have to be a spread. It could be a call. You could have a call on your watch list and just like slide up the ticker, and it'll show you the potential profit. It's literally a chart.
Simulate my returns.
Yeah, I'll do it on my phone right now. So you can.
Yeah. Okay. So this is. I haven't played with this.
So right here, simulate my return.
I see it. Like I see it.
It's so fun, dude. It's kind of dangerous because you just start like. You're like, oh, I could make a lot of money if this thing just keeps going up. You see that?
Yeah.
And then obviously the max on the SoFi thing is 40 something grand, 46 grand on a $3,500 investment if it hits 20. And if it hits 20 earlier, you can see. If it hits 20 tomorrow, the $3 grand goes to 32 grand. So it's a 10x tomorrow.
Well, that's cool that they do this. Like I haven't actually played with this. Honestly, it's just because this is how I learned, like what I was showing you here. Like this is how we do it.
Yeah. Okay, so that's SoFi. Overall, you are bullish on SoFi.
Yeah.
Coming.
I like it. I just, as volatility changed, no matter what that. So like on Thinkorswim, what I can do is I can change like what the volatility skew is, if that makes sense. Like it may not make sense for you, but like I can adjust here what volatility is. Like if I think it's going to be 250%, I can change that and things actually.
Yeah, we can't do that. We can't do that on Hood.
Right. Like I do that a lot because I have like volatility calculation and stuff. But anyways, so that's where it is. I think SOFI, look, I think right here, right now is actually when if it's going to start moving, it's probably going to be right about now, dude. Especially ahead of earnings at the end of the month. That's why I bought
the calls recently. That's why I bought them. I was like, you know what?
Yeah, I don't hate that. And SOFI like itself, again, stupid low volatility. So I like, to me, like, because it's so low, dude, just buy the call. Why you need the spread?
I like the spread.
I know you like the spread.
I like the spread, you know. So
I hate the spread.
Okay, can we do BABA? And can you admit you were wrong about China?
How many calls there were just to straight up $20 strikes for that January 2026?
Yeah, but again, dude, the reason I like the spread is because it reduces the premium you pay up front. So like my max return is a 14x,
that's true,
which is not bad, you know.
Yeah, I think most people in general actually trade the premiums, I believe.
Like people buy a call so they could have exponential returns outside of the underlying asset. The spread gives you the same exponential returns. It caps it, but a 14x is
like trust me,
premium is lower.
I have videos like crazy on my YouTube channel on like how to trade spreads and etc. Like I'm all about it. You know, stocks don't go up forever. There's no reason to own optionality on SOFI over 20 if you don't think it's going over 20, right? So
but also, if SOFI were to go to like 15 and then come back down, the short side of my spread collects theta, which is it makes the volatility a little easier to handle, even if
the volatility, it makes the spread as a position doesn't move as much as a single leg option.
Correct.
It does not.
Exactly.
Okay,
BABA, and why you were totally wrong, completely. You get a lot of things right on this channel. This one, you got to admit, you were wrong on China, completely wrong. Like
I'm not
wrong. It's embarrassing.
I'm not a China bull at all.
It doesn't matter. No. But you're not a Rocket Lab bull either. You're a technical bull, and you didn't see the technicals lining up on Alibaba.
Well, I'm wrong. Like some China stuff right now.
Wait, hold on. What'd you say? You're long? What do you mean you're long?
I'm long China stuff.
When did you go long China?
I've gone long a couple times this week. I went long again today. You
basically are a trader to America. You've joined the CCP. You talked for 3 years on why you hate China.
If I can extract money out of these Chinese equities, I'm doing it. And I'm going to take it and put it into American companies.
All right. So can you give me your general China thesis, and then we'll talk about BABA? What do you think?
General China thesis, I still stay, right? I think that, so BABA has never traded on fundamentals from a company perspective, right? I think China as a whole definitely trades on policy and things like that. And Chinese equities 100% trade on technicals, right? They've just been like for decades, like perpetual shorts. And, you know, until there was a single catalyst, nothing changed. Over here, like your cash to sales or whatever was no different than it is over here. So nothing from the company perspective fundamentally has changed this entire time. Nothing has changed about BABA this entire time. The one thing that did change is the stimulus package, let's call it, right? So increasing, injecting essentially, we'll call it potential liquidity into the system. But my thing for here is like whenever China ends up running, it ends up running like really big. And do I think that this can continue to run? I do think this can continue to run. It, you know, 100% in 3 months on the last bounce. That's a big bounce, dude, right? But it tends to be a quarter by quarter type of move. And so for 3 months, I think, you get situations where you're like this. We're not 3 months in right now. I mean, you're barely a couple days in,
Holy shit.
20 days in, and you're 38%. So this 38%, just as an aside, is half of what this move was so far. So it is a squeeze setup. I think the biggest thing is, communists, whatever aside, I think that Xi Jinping made it pretty clear though, that he did say buy equities. Did he not? Like almost like if he says to do that, then okay, that's how they're going to spread the wealth. Right. And so if that's the plan in the meantime, okay, I can say that that's the plan. But what we really want to see, here's the thing, if China is going to be a real long for any considerable period of time, longer than 3 months, you need to see policy change, like real policy change. And we've yet to see that happen. So if after this break, they do come out with some real policy changes, then I could be like, okay, it might actually have some sustainability here. But until I see that, I don't really believe that I don't see the sustainability factor here until we see hard policy changes at a core fundamental government like level. So from here, can it continue to squeeze higher? Yeah, it sure can. FXI as a index had some of the like most ridiculous option flow I've ever seen today. I did look at this. I'll just tell you right now, net, and you know, if Vlad is listening, I would love to be able to do stuff like this and be able to pull up Thinkorswim, be able to pull up Robinhood and a whole chain and be like, here's how many net calls, 2.4 million calls to 442,000 puts. That's a huge skew, right? The biggest trades actually I see are this is saying spreads, but I can also drill in on Thinkorswim and see what are the 10 largest single trader orders. So about 192,000 calls were sold at the 33 strike for November 15th and the 37 strike for October 25th. But I can also tell you that at the same time, I saw that same trader roll up into November 15th, like 45 calls. And so that these look like sold, but these are profit taking orders. And I also saw the that flow actually come in to the November 15th $40 calls and $45 calls at the same time, which were pretty wild. So let me see if I can. Oh, sorry.
Are you long FXI? What are you long for China?
Yeah. So look at this, 400,000 $40 calls for November 15th. Crazy, right? And another 400,000 $45 strikes.
Do you think the Chinese people are buying it or
no?
American?
No. I think this is all Western. They're closed, dude. It's the holiday, right? I think this is America pumping them. But like, continuing on. Whether or not they rug us, that's what's TBD.
Well, okay, so let's talk about that for a second. How scared are you that Xi Jinping rugs the whole stimulus agenda? Because
in a situation like this, I don't think that you should have enough. I don't have enough money in here to really care, right? Like it's gonna go or it's not, right? And if it does, I'll do okay. And if it doesn't, well, I didn't put that much. And that's where I'm at, right? It's like I'll jump in for the trade, but it's not like I'm not on this high conviction list where it's like, okay, I'm gonna take everything. I'm not gonna trade anything else except China here now.
This is where I think people who study China like deeply knew something more than the rest of the world, because we just woke up one morning and they decided to stimulate. Like I'm sure people had to like read between the tea leaves that this was coming, but no one knew, or like you and I didn't know.
Yeah, that's wild. Right. It is wild. Like that just happened, right? Like you're right. Like you literally woke up one day and boom, here it is. So like anybody, like it's all kind of like speculation to me otherwise, but yeah, we're squeezing pretty much on every time frame still. So like this is a monthly scale. If this gets over, what's the next consolidation point? Look, if FXI gets a consolidation point, I think the trade's over.
What do you mean?
I don't think you want to see a consolidation point. I think you just got it. It was right here, right? So like, here's intraday, right? So like you have a big gap up and you pull back down. It's day by day. This was the 200-week simple moving average at 32, right? It's pretty much clear skies. So maybe they're asking like, what's the target? So it's 37s and then it's really into this 45 level, right? Like it's really into here legitimately. So this is that point of control really from that prior area. And that's what you would target. You target into the 40 plus range, into 45s. That is what it is. So I guess the question, what's the next consolidation level? It's there. I know this chart looks weird because it's so choppy. It's China, but it's right in here. So $40, just 40, 45. So it could be, it could be a $40, $45 call debit spread buying, but
I'm just not touching it because I can't sleep well at night if I put real money in China.
Yeah, your positions, dude. So like your positions are significant percentages of your
my current portfolio, yeah.
Of your your positions. I feel like I've gotten a good gist of like your style, and like you like the high conviction, where you can do something pretty methodical and chill on it, knowing that I've done my homework and I have enough time to let this play out
exactly
over a considerable period of time. Whereas like this is high frequency trading, man. This is what it is, right? Like you're not the guy that's going to throw down like, I don't know, $100 on black, maybe not, but that's what this is, to be fair, to me. So,
and I think there's a fundamental
I play a lot of craps. I play roulette, right? But like, you won't find me at the blackjack table. I was laughing with somebody who's like, I hate that. That's a freaking grind, right? Like I will not play that.
Okay, hold on. Speaking of gambling, can we look at WYNN? Because someone wants WYNN stock, WYNN.
It's all the China. It's the whole Chinese story. So WYNN, LVS, all same thing. MGM's not getting the love yet. WYNN and LVS are the two Macau related casino companies. So this is the China trade. Straight up.
Why is WYNN the China trade?
WYNN and LVS.
Why are they China trade?
Macau. So if China is stimulating, it's your bet on what are they going to do with their money? Are they going to invest it or are they going to gamble it away?
Wait, hold on. You think Chinese people making more money, they will go to WYNN hotels and casinos and gamble?
Yeah.
Huh. Interesting.
Did you not? This is a normal trade.
I didn't think the conclusion of that was the gamble.
I mean, it's like they will. They will.
No,
you'll have more free
cash. A really good point.
Like it's just what it is. So yeah, WYNN here it's a crazy consolidation. These stocks have been dormant for a very long time. So it's the same kind of thing as like, look, this is a way to potentially trade China, but also have the US exposure at the same time. I don't hate it by any means. You're right here. So this is, if you get a pullback on something like a WYNN, and specifically to like here, what is this, 96.50? I do like that area, right? So it's this first breakout. This is China driven trade. MGM had something recently where like they had some investor day. It didn't really do anything. This does not have that type of exposure. So you're not getting that same kind of price action, right? LVS does. And so there you are. So you're getting the same kind of price action. These have not really broken out just yet though. I missed that comment.
They just said Macau is bigger than Vegas.
It is. Have you ever been?
Well, I've never been to China, so.
Has June been?
I don't know. Who's that? Yo, put in the chat if you've been to China. Put in the chat. I
heard that Macau is like weird. Like it's different than Vegas. Like I heard it's like a bunch of private rooms and stuff like that. I don't know.
I would imagine there are some weird things happening in Macau.
All right. Amit is investing team road trip to Macau after India.
Yo, who's been to China? I'm curious. I'm kind of scared of going because I've said some bad things about China and I feel like they have me ready to chop off if I
can't do that.
Yeah, I can't. So I don't think I'll ever go, dude. They have social capital scores. Like they keep a score on people and like how well they're complying. No, like 0 to 100. They have a legit score system.
I believe it.
It's very scary, dude. Like what if my score is 0 right now? I walk in and then boom, like put this guy in jail.
Put him in jail.
It's scary, dude. It actually, like people think it's a joke, but it's very scary to think of it like that. Okay, can we do Oxy? Yeah, you want to do Oxy? Yeah. oil?
Yeah. So for whatever reason, people were like, I was on this Twitter space the other day, and like it was like, oh, we're gonna be short oil, short oil. It was down here, and I was looking at this. I'm like, this is a long, and oil. This is CL. This is crude futures. If you don't know, it's been in a pretty typical range, and it's been on this range literally from right here. These are the lows. Anytime you're below 70, it's kind of like a buy zone. And then it makes its trajectory up to 85, like regularly. So this is a normal thing. It also, like refiners and those oil producers here, they make money as long as oil is over crude is over 45. So it's all good. Doesn't really matter. There were a couple of stocks like Exxon just the other day. Check this out. Like you could have looked at Exxon literally the other day and been like, this is not going to hold just on a daily perspective. Like this is this is breaking down. And if you looked at it close enough, and we did in the server in the group, we're like, you know what? No, this is actually a buy right around here. And so the problem with this is that it moves so fast, right? Like it was instantly up. You want to look at your 200-day simple moving average. It was this day here.
To be fair, though, the only reason oil stocks are up is because the Iran headline, right? Because
so
oil was down 4%
a buy. Annually, oil is a buy during hurricane season. So also we have hurricanes now, right? So hurricane season, like it puts sometimes like sometimes production gets kind of tightened and things like that. Yeah,
but the oil on yesterday was down 4% in the morning. Iran strikes, oil goes up 5%.
Boom. Yeah. And actually, I feel like it should have been up a lot more. So we have this, I call like the conflict cabinet, right? So there's certain trades, the war trades are like precious metals, gold, silver, or gold, and oil. And you can try to do defensive stocks, but honestly, defensive stocks are in their own, bull trend in their own right. So I don't know that that's going to be catalyst necessarily, like they pop, but by that time it's gone. But, one of the thesis you were asking me, like, why be long gold just the other day? It's like, this is one of the reasons. Oil is also right up in there. But, it was this day, one of these days. Anyways, it was looking really bad. And then all of a sudden, we're actually at all-time highs, like in very quick succession on Exxon. So as this played out, like you're here, and now all of a sudden the chart looks crazy bullish. Just get out of this. And we're literally peaking possibly at all-time highs. Now the weekly chart's going to look a lot more bullish here. But this kind of setup, now you're like, whoa, from 3 weeks ago, or even just the other day, it was looking really bad. So what we have here, these little areas, this is like your liquidity grabs. So this was, it was just this most recent. It was over here. We're looking at this and this downtrend retest. So remember, we were just looking at NVIDIA, and whenever we have these break of trends and AMD and like how to play this setup, it's like the first pop doesn't always go through, but when you get a retest like this, literally this, and you can line it up to either critical, what we call order blocks, which, order block is right here. You can see last time they were buying it up, and like a 200-day simple moving average. You can get a pretty epic reversal. And that's exactly what happened on some of these oils. It was just like instantly going 1, 2, 3, here we are. So Oxy, I think, is the catch-up trade. And sometimes you need to have what we call like these little liquidity grabs. Oxy's been on a 3-year consolidation, like literally from here, right? We're talking 900 something days. So 3-year consolidation. It was looking really bad. But again, when you zoom in and you're like, okay, wait a second, some of this stuff was actually starting to look like, all right, it could be going. So here, I think if this goes up any higher on Oxy, it's just hammer time. Like like right here, right now. And I think ahead of earnings, this is good. Like this next push could actually be, I think this last hammer was like
my only fear is the Iran-Israel headlines go away and then oil just goes right back down. That's my only fear.
I think it's already been de-risked is my point. So like, I think that this push below this 3-year consolidation could be exactly what Oxy needs to get out of this entire box. So like, I think that this little push to collect one more last tranche of buyers could be just like what happened with Exxon and over here. And honestly, I think out of this box is actually 85 in a longer term fashion when you look at this from a longer period, right? So if this happens, yeah, this is in the 85. So this was one where like I was taking some small shots. I took some small shots, made like, 200-300% on like very near dated. Today, I ended up deciding to not mess with this anymore and be like, I'm just going to go ahead and go like longer dated March calls for next year, targeting this upper range here. So yeah. I think, when you zoom out, look left, even right here, this is a big time level. So if this is what happens, like, and you get this, like if Oxy defends really like 49, that could be the springboard that it needed to launch out of this consolidation.
That's what I'm thinking. And there's a couple of people I know that are loading up on Oxy calls right now, and they're up already because the moves happened. And they're like, do we sell or is this thing going up?
No. I started rolling. So today I basically rolled. Like I closed my short term and I said, I'm not messing with this anymore. I just went long term. So I think, this is a situation where like I also bought equity at the same time because I think, this could be like a Nike 70 where you don't see that spot for a while. And do I want to have this exposure longer term? I actually kind of do. I don't think oil is going away tomorrow. But, for now, look, we're here. By the time this is 60s again, they're going to be thinking something else, but we're already going to be in it deep and we really won't care at that point. So we'll let it play out. So I think this was that opportunity. This could be the opportunity. And again, this is it right here. It's going to be very crystal clear because the risk reward on this setup, honestly, it's really not that bad. I wouldn't even say it's like that much lower. Like,
yeah, worst case is you own some oil stocks. That's not horrible either. I mean, if you have to.
If the market, and that's the other thing, like if the market does start to sell off from a tech perspective, I also want to have this exposure because this is going to be like inverse that. This is going to be your safety trade. So here now is kind of like that time where you do want to, it's a bit of a rebalance, I guess. I don't think I'm going to sell many tech stocks here. If anything, I'm probably just going to buy if we get the big dump. I'm just like, the only thing I was looking across the board, I was like, what can I sell to raise capital?
Right.
There wasn't really a whole lot that I was really interested in selling yet, to be completely honest. But yeah, this is it, right? So this could be the moment on Oxy. And, talking about flow today, also like this is some of the most bullish option flow I've seen in a very long time. In general, Oxy, I posted about it earlier. It's like, look, 197,000 calls to 25,000 puts. It's a massive skew. And most of these 40% of the calls, they're slapping the ass, which means like, go. Right? Like they're just like, they're marketing. So it's pretty bullish flow. I will say that IV is kind of elevated here, but that's because we do have earnings coming. But I think in this instance, it might be warranted just in case. So let's see. And by the way, like this stuff, I wouldn't plan on selling into earnings. Like I would just hold it through.
Right.
But you can see like this are the average moves. So about, let's say, call it 3% on average.
There's a divvy on this, right? 3% too? 2% on Oxy?
Dividends?
I'm pretty sure there's a divvy here.
Yeah, 1.6.
Okay, so there's a divvy.
22 cents coming December 6th. How are we on time?
So let's do 5 rapid fire ones, just 1 minute each. I'll keep you on time, and then we'll do Bitcoin and we'll end it off. That'll be it.
Okay.
Okay, first one, Snapchat.
Whoa, dude.
60 seconds. Here we go.
60 seconds. All right. So $10 is a major level, right? This was that prior consolidation. I took a shot here before and end up stopping out. This is right here, this massive consolidation low. You know, Amit did text me earlier and say he only uses Snapchat for his actual texting app. So there's bullish, like you could be bullish there, but that's $10, $10, $11 is massive. You know, this makes a round trip typically from like 8 to 15. So you're kind of like right in the middle. I don't know that the risk reward is great here. You're going to know, you know, on earnings come, you know, a couple days.
All right. PLMR.
All right. Sector check. This is insurance again. It's doing the deal, right? Doing the same thing. I think this is just like slow mover. I don't hate it, but I don't love it. Below this top right here, you got to see some catalyst. This is 97.81. So it's had 1, 2, 3 tries really at this top. Fourth try should be the charm. So 1, 2, 3. If this makes another run for it, I would expect it to break out, but not yet. For now, it's defending right here. I wouldn't sell this either. I would just let it go.
Okay. Stay
long. There's if you like insurance though, man, I would just look at, like, have you seen these charts? Like, this is Progressive.
Wow.
Right. Allstate.
Well, it's peak season for them, right?
Yeah. What's I haven't seen this. CB is Buffett's. Yeah.
Oh, I forgot Chubbs. You know, Drake's right-hand guy is named Chubb, so every time like his best friend is named Chubb. Okay, let's do PayPal.
PayPal. I haven't looked at it today. Okay, PayPal. So $80 was like, that was key level for sure. So I don't know that you're selling this at this point though. I think you're just in it to win it, right? Like if there's something like, this is a pretty big level. Like that 78, we talked about it, 78, give or take, was this, I believe this peak right here. So you really want to see it like over that monthly close. So let's say by the end of the year, if you're not over 78, you're back into consolidation. But I don't know that you want to like run away from this. It's not a short. It wasn't a short. It has not been a short. Look at this. These big wicks that you see right now at 76.50. That's buying pressure. When you see like the daily candles have these large lower wicks, these are this buying pressure. So someone's coming in and picking this off. It could be PayPal. Do we know how much of the buyback they've actually done so far?
We'll find out in Q3. We'll find out.
Okay. So we'll find out how much ammo they have left. I think as long as there's still ammo available, there's going to be a floor held on this stock.
Okay.
So it's not going down. Celsius. Oh, what's the date? I have a little bit of time. Is this another 52-week low?
Is it really? Yeah. Looks like. Damn.
Here we are. Let's see. Closing on the lows. Dude, there's no love. I don't like the close.
Where's that? 30 bucks?
Yeah. So these are where my cash secured puts are at 30, which I was buying anyways. So, okay, fine. That puts my cost at like, well, the 35s, I would be underwater at $30.30, which we're still not there yet. Could we get there? Yeah, it would take like half a session at this point, but it's still this is that point of control. So that's 29 for this prior area. I still would rather be a buyer than a seller here. I just don't, I'm in like, okay, I'll accumulate mode. If this ever gets back over this 35 area, like cool. But let's be fair. This is currently a heavy series of lower highs and lower lows right now. So this is the definition of catching a falling knife right now.
Right.
But yeah, I'm okay. I'll stick it out, but don't be like crazy long, like on any pop. Like you still want to just like nibbles.
Okay.
We got earnings coming too. When is earnings? Earnings are November. Yeah, so maybe mid-month we get a pop at some point, and we'll decide. Like, I'll have an opportunity when I get assigned these puts. I'll have an opportunity because I will be assigned. I'll have an opportunity to like sell cover calls and decide if I want to get out of it or not. Okay.
Okay, we have one more, which is a good transition to Bitcoin, but Coinbase.
I love me some coins. Probably my highest conviction near term. Is that stupid? It might be completely reckless. I love this spot on on Coinbase. I think that have we talked about this? Oh my God, this is a big deal.
We talked about this last week. You said you were bullish on it.
No, like the situation, the crypto situation. So I like Coinbase for two reasons. One, we have earnings coming up, right? End of October. We know that trading volumes just shot through the roof on this. My gut is that we're going to approach one of the most epic alt seasons of the era. Hopefully, not the most epic alt season, because I think that's already behind us. But I have a feeling that like if you're long Bitcoin, you're gonna be sad because some of these alts might be going 10x what Bitcoin's going to do. And unlike Robinhood, who doesn't unfortunately let you even trade Solana, I feel like Coinbase is going to be the one. Although Robinhood does have Kraken now, right? Did they buy Kraken?
No, they didn't buy Kraken.
Who did they buy?
They buy Bitstamp.
Okay, so they have some of the altcoin stuff now, but I feel like alt season cometh, and I'm kind of excited about that. And there are two things that we need to see for alt season to be validated. Are you familiar with the term Bitcoin dominance?
Yeah.
Okay, so if we see Bitcoin dominance weakening while the total market cap of crypto stabilizes and starts to bounce. So once this total market cap, so all I did was just type in total, this will come up, total crypto cap. We hit this 200-day here. You can run technicals on this if you want, but it's the same kind of thing. This looks like a buyable dip in here. If the total crypto market cap starts to recover, and during that recovery, you start to see the altcoins outperforming Bitcoin, or i.e. Bitcoin dominance waning, that is the signal of the combination of those two events, total crypto cap breaking out and Bitcoin dominance waning. The combination of those two events, I'm telling you, Amit, are going to be it's going to be one of the most powerful moments in the crypto space that you can come across. And I think this is the moment when we start to stabilize and we can take a look at Bitcoin, it should be somewhere around here. Like this was it. So this is again,
Bitcoin and Tether together.
Bitcoin and what?
You're doing Bitcoin Tether.
Yeah, this is the one that you want to do.
Why?
And you want to do it on the Binance exchange because that's the one. So BTC USDT. You don't want to do Coinbase because honestly, that's not where the volume is. It's on Binance, but it's right here. This was that channel, right? So this was that supply zone, right in here. So literally right here. So remember I don't think this was not our chart.
No, I don't think so. Your broader point though is that when people start trading altcoins, that's where Coinbase's volumes go through the roof. That's your point.
Yeah, and I think that if we see that, God, where's our chart? If we start to see, I'll just go back. If we start to see that happen, ahead of earnings or around earnings, we're going to get like a massive earnings kind of pop, if you will.
Okay, what would be your response to this? Because I kind of agree with Doug here. Altcoin season is when people try to find the next Bitcoin after Bitcoin runs. And that's when people get excited.
No. So it's like this. Just maybe that's not my opinion. It's like a rotation similar to IWM over mega cap. So it's the rotation of large cap into small cap and the market as a whole broadening. if that makes sense. And so like your higher beta trades, like Tom Lee will be like IWM, small cap. It's the same kind of concept, exactly the same, where if your large cap is Bitcoin and Ethereum, you would then see, and maybe even Solana to a certain point, you then see like your Cardanos, like your Avalanches, and your other medium small cap like.
So but here's my question. Bitcoin is only up 36% year to date. Is that enough? Is like a 20% move enough on Bitcoin where, oh my God, it's up 50% year to date. Now I need to move into small.
No, I think Bitcoin can change on a dime, right? Like, you know, that this can be an explosive move. By the way,
but we need Bitcoin at like 80 to 90K for your thesis to play out. So
100%. So it's into 90s, right? And potentially it's just under 100. But it's like your avalanches from 23 to 123 or to 250, or your Cardanos.
So this is so you're in alignment with me. Bitcoin has to get to close to 100 for altcoin season to really take off.
Yeah. Okay. But like it absolutely does, right? So that's the total crypto cap. The total crypto market cap cannot break out without Bitcoin doing something. Right. It just can't happen. It will not happen. But it would be like this, like a Cardano going from 30 cents. This is alt season. This is what it looks like, right? Like it looks like this. But Bitcoin's not going to look like that. Like this is an alt season. Here.
Also, WIF was up 30% this week.
I don't know with it. I stick
dog
to
with hat.
I stick to layer ones, right? I don't like.
You said altcoins, bro. I'm giving you some altcoins.
The most that you'll get me is like Cosmos, right? Like an atom. Like that's it. But this is what an altcoin run looks like. All of this. So what we're talking about is like it's going to be insane. You know, you don't want to hold this stuff, but these are, you know, multi 100% baggers, you know, in short order. Whereas we're talking about a 50% run.
So Doge should run when Bitcoin runs then, right?
Yeah.
So why aren't we buying Doge then?
Because I just don't like, why don't you buy like Leash?
It's 11
We'll
cents,
buy Leash, right?
How many Doge can I get for $100? How much Doge? 100 divided by 0.11. I can get 900 Dogecoin, bro, just for
Doge.
Just for putting in $100.
Yeah. So like, sure, like meme coins. So this is a straight up trade, right? Like there's no practical nothing here, but like, to me, it's like if I'm gonna get stuck in something, I might as well get stuck in something that would have some kind of like potential longer term. So that's why. Yeah, I mean, like a Matic, this kind of stuff. Like those would be like you could get like a crazy one. Even like a Link, dude.
Oh yeah, this one
Link at like 65.
Yeah.
Yeah, even like a Link, it's possible. Like this, I think this whole thing was an alt run.
Well, March was the run. Yeah, when Bitcoin was at 73, there was.
Well, I mean, like this one. This is. Oh yeah, if you get like an epic, full year run. So yeah, I think this. I believe is a full alt season run after. Is this after a halving cycle?
Yes.
Yeah. So like 1,000%, right? I mean. So, anyways, that's the setup. But like ahead of that, you know, Bitcoin could be a double easily. So during that,
what is Bitcoin? Why is it falling today? Why is Bitcoin down?
Oh, so it's this, and I posted this one too. So it's technicals right now. I think you're still in the setup mode. So from here to here, was it this one? It was this. So we had this first break. We wanted to see, so what we saw, we wanted to see that 200-day, this red line hold. We didn't. This was that I posted this Sunday that like we're going to get a pullback. Ideally, the pullback would hold right around that 64K. It did not. And so now it's like, okay, so we get a dip. Now the question is like, where does the dip go? Where's the lowest spot that a higher low can show up? So if this is a higher low, So higher low. What we want is we want a series of higher lows, right? If this is going to change, and this has to be, come on, a higher high, which is that first break of structure from your lower high. Where is the spot that the lowest point at which a higher low can show up? So if this is the last lower high, higher low, Jesus, then it's really like right in here.
I think the Middle East headlines also got Bitcoin past 2 days, to be honest.
I don't think so.
Bitcoin 100% think so, dude. It fell 3% yesterday, right when Iran launched the missiles.
I mean, yeah, but it was down 3% the day before that.
That is true. That is true.
So I think it was already doing this thing, and it just didn't have the like Bitcoin doesn't have like the gold like factor. Like if the zombie apocalypse comes, there's probably no technology, so you're probably not sending Bitcoin to your friends. So I don't know that theory holds up, whereas gold would. But anyways, my point is that in this area, this is the area that we want to see Bitcoin hold. And if it can hold this, then I think we can say that the lows are in. If that makes sense. The biggest problem that we have, and for the whole theory of Q4, late Q4, the holiday eating season to happen, we need Bitcoin to base out before then, right? Because that theory is like, hey, look, we're breaking out over all-time highs by like November timeframe, right? Like that's what this needs to look like. So it's a trajectory. If this is locking a higher low, it needs to be right in here. It needs to be. But so this is the spot, right? This is the spot where like, is this last call on Bitcoin? It might be. It might be last call.
I think you're right that it's bottoming. I 1000% think you're correct on that. I wonder what's the catalyst, because China stimulus also helped pump it to 66. Right?
Yeah, I think that's possible, right? So, but from here to here, it's good. I'm not selling. I mean, dude, I wasn't selling at 50 anyways. So I'm not selling at 100 either.
I know you're going to be a trillionaire with it. All right, we got to do 2 quick ones and then get out of here. And then we got to go. Archer, because Christian's about to put his kids' tuition fund in there, and we
what?
Make sure.
What?
I hope you're joking, Christian, but if you do,
Archer Daniels?
No, Archer Aviation.
I don't know the ticker.
ACVH.
Got it. ACHR. Okay,
dude, this is a startup that's public that probably might not deserve to be public right now. I mean,
ouch, dude.
It's a flying eVTOL jet.
Let's go.
It's a cool company. It's just, I don't know.
Oh, what is it, Joby? Did Joby get something? Is this Joby?
No, this is not Joby, but Joby got a $500 million Toyota investment today. That's what.
Yeah, I think that's what you're moving on.
Yeah,
I think it's sympathy. Is that not this?
Well, Joby's a competitor, so it's the same company. Yeah.
Yeah. So if Joby got the injection, then your move is on hopes of Archer getting an injection.
Yeah,
it's a Mimi.
I don't see a fundamental thesis to this yet, unless you're
I don't know it enough.
Long. Like, by the way, they use Palantir. They're using Palantir software.
Look, what's that? Why are they estimating to have a massive pop in 2025 on revenue?
I don't know.
How are they supposed to go from no money, dude? Is this even they're not even live.
I got to do some research. I'm not sure.
I don't show any money here. Is this wrong?
No. You're probably right.
Is this a straight up story stock?
It is absolutely a story shock. Kathy owns a bunch of this too.
They're pre-revenue.
Let me confirm. Yeah. Literally, they made $12 million in Q4 2023
of investments.
They have not made money in the past 2 quarters, or like
no. Have they made revenue? Not like made a profit. Have they taken a purchase?
So either my chart is looking wrong, but what I'm looking at here is not any revenue.
That's what I'm showing. So they're not accepting dollars.
Or they
I
don't have
can't do
anything to sell yet fully. I don't know.
Yeah, they're not accepting your money unless it's.
They have a 6 billion book of orders. Oh,
But-
that's why they're probably expecting 2025
Okay.
for the revenue to come in. Yeah, I would just be, you got to be, I wouldn't put the kids' tuition fund in this one.
Yeah. So $6 billion book of orders, I think, is actually risky. In business, I can have, depending on how that is, like you can have people say, yes, I'm going to buy this stuff on paper, like a purchase order. But if I'm not actually booking the purchase order, it's unrecognized revenue, which is more risky from a business perspective, because they're easy to lose.
Right.
It's not even like pre-sales. Like if it was pre-sales, that might be something else.
All right,
That is-
last one, SFM.
Nick is SFM. Oh, Nick is
Farmers.
pinging me on Slob. Ooh, Slob looks good. SFM.
Yeah.
Sprouts. I like Sprouts. Although what the fuck?
It's had a good year.
I don't like Sprouts up there. I shop at Sprouts, bro.
Of course you do, dude. You're in Silicon Valley. You have to.
What?
That's what it's like a Whole Foods. It's a bougie spot, right?
It's like not. It's like, but that's the thing. It's not really. I mean, it's kind of turning into one, though. I will say that it's like a Knob Hill. Do you have a Knob Hill farmers market?
No, I've never seen Noble.
They're 11 billion. I didn't even know these guys.
It's one. I think last earnings they ran up like 30% or something. It's been a hell of a
Bro,
year for them.
I did not know. Grocery is not usually like
It's
the-
not. It's
the
absolutely
business. I will tell you. So I went to Sprouts the other day, and I was walking around, and I was thinking, I was like, dude, this place used to be like you could get good deals. They have great little like deli area, and it's all kind of like it's not bougie, but it's. Did you go to Sprouts? Have you been? Do you have a
not.
Sprouts?
No, it's because it's bougie. It's not near me.
You were. Anyways,
I knew what you're about to say, but no, I've never been there. I've never been there.
They're not big places. They're small places. They weren't super busy either. But
Is it bougier than Trader Joe's or no?
It's just like Trader Joe's.
Okay, so then it's not that busy.
Yeah, it's just like Trader Joe's. But I would say, like, the last time I was there, I was thinking I should be going to maybe like a Trader Joe's because the prices were getting a little bit steep. And so that's all I was thinking. Like the pricing is getting a little steep at the Sprouts for me, and it wasn't so busy. So I don't know.
So
They're
would you
making
buy
money.
here, or this chart is too run away from you?
I think this is what's the PE on this? Is this more than is this more than Costco at 50?
12? No, not 12.
It's 34.
I mean, that's not horrible. Let me see the growth rate.
I mean, it's not at a discount.
It's
That's
not
for
a discount.
sure.
Correct.
It's not at a discount, and I don't know. I'm literally speculating here just from my personal experience of shopping there. It's like I was thinking, like, oh, why am I shopping here still?
Dude,
Because
SFM is up 125% year to date. Carvana is up 240% year to date.
Carvana is different, where I feel like you could be long Carvana. Actually.
I don't know enough about it to agree with you or not.
People think that this is like they're selling car vending machines. Maybe at some point they were. I've never personally seen the car vending machine. They were priced for bankruptcy. Now they're priced like now they're not. They're not going bankrupt. I don't believe that they're going 36 billion. They're not priced for bankruptcy at all anymore. But I don't think this company is going out of business.
Dude,
and
244%. You could have bought it January 1st and just like slept the whole year. Like,
yeah, I think you might still be able to do something like that because like the street. So here's the deal. So this last quarter, they're profitable. The last two quarters, they flip-flop right between unprofitability, massive cash burn to all of a sudden having a profitable quarter in Q3 2023. Then flip flop again, and then last two quarters in a row of profitability, right? You have another quarter of profitability and 2 quarters from here of like growing profitability. Then you have an actual story on your hands.
Also, remember, it was short like 50% going into that first quarter of profitability.
Yes. And so, but right now, the street is now expecting them to be profitable this coming quarter. So if for whatever reason they do not show a profit and the street is expecting profit, it's going to get shellacked.
Yeah.
Like shellacked. But yeah, what do I have this here? 99% down. Let's see, where are we sitting?
It went down 99% at one point.
Because this was $375.
That's where bottom feeding sometimes works, bro. You look at something that's just been destroyed and you're like, you know what? I can get 50 shares for $2.
So 189. At 189, you have recovered 50% of the shellacking. That's a pretty good bounce. If you can hold 200, you're going to 240. That's what the chart says.
Yeah.
It's almost like a Broku.
Okay, Jason, we got to do one more, then we really got to end it because it's a long one. Last one, Rivian.
Oh, so dude, I missed the. I saw this thing at freaking 10:20 this morning. I'm like, I need to buy this, and I didn't get it. I saw this coming down. You know, this is the story. So RIVN, we call her Rivy. We call her RIVN.
Do you make names for all your stocks, dude? Like,
dude, how do you not? What?
I like it. It's fun.
RIVN. Rivi-N with 2 V's. So anyways, so here's where we are. We were expecting, we wanted to see this last quarter, we wanted to see the new models coming out and making a little bit more or losing a little bit less rather. Unfortunately, that's not what we got. So prior 2 quarters ago, lost $1.20 per share. Last quarter, $1.26. We want to see those new models start to improve some of these gross profits or loss per vehicle. I think they are slightly, but I also don't know that that new model was really in this last report. So at this coming quarter, the thing is that this coming quarter, the street is expecting them to really ramp up on the not losing as much money. Remember, this is a long thing. It could take a while, but here's the deal. And it's going to come to this coming report. If for whatever reason, Rivian loses more than $1.25 per share or loses more per vehicle, this is going to get toasted. And it could be a Lucid 2.0. But if they do show a meaningful increase in loss per car, let's say, we need to find like an infographic of here's Rivian's trajectory of like how much they're losing per vehicle. At 1020, I had 1040 in my mind. So that's exactly where we got that last kind of like push boom right here from that last area. The last time I said, this is the line in the sand, I'm buying here now. It was literally at this, it was at 1028. I couldn't believe that I saw it again. That's what happened. We got it again. I believe that that's the floor for now.
But are you not concerned about why you got it again?
I just told you why I think I got it again, right? And it was because that last quarter report, like, look, we're not going hot. We're not losing. We're not making more.
No,
right?
I don't think it's because of that. I think it's because of Volkswagen might be pulling out of the 5 billion. Isn't that the reason?
I didn't catch that headline. I mean, if they're pulling out of the 5 billion, then yeah, you should go lower than this. But you know, I didn't catch the headline.
That was a real headline. Yeah, that was It was last week, right, guys?
Headline.
It was a huge headline, right? Last week, you guys saw. I
didn't see it. I missed it. Swear to God.
Let me try to see if I can pull it up. But yeah, it was that's when Rivian fell that day, and I was like, oh, that's not good for Rivian.
No, that's not. But I legit missed the headline.
It's not that they're pulling out. It's that fuck. What's the exact wording on the headline, guys? There's this.
I'm not even seeing it. That's the thing. It's not. So what's going on?
Okay, let me see. Okay, first let me see if I can.
Price target
was-
19. It would have been somewhere on the 19th, right?
Yes, exactly. That sounds exactly like when that new. I remember on the market open, we definitely covered it.
I got downgrades.
Was it a downgrade? Let me see.
I got a serious
No, I'm not
downgrade.
getting
I absolutely missed it.
Yeah, I'm not finding it either, but it's definitely a headline that happened.
Yeah.
Something that was bad for Rivian, which made people start doubting if they would put in.
And I think so. I think that's, that's it, right? So I think that regardless of whatever it was, it's clear to me. The stock chart told me the second that we lost this 1280, it was clear to me that, like, look, the market doesn't believe that they're going to be able to turn this around, and so you're getting priced pretty much exactly where you were before. So it's literally going to come down to earnings. So I think at this point, maybe you get a little bit of a pop before, but it's probably just gonna. I think this is going to be a base, right?
Well, you
here.
like the risk reward around $8 to $10 personally. Yeah,
I still do.
Yeah. I think that's
fair. Does it? I'm straight up saying, like, look, if they don't do it this next quarter, it's going to be $3. It's gonna be a $3 stock.
I mean, that CEO RJ doesn't get me excited either. So that's, but it's not about him. It's about the gross margins at this point,
That's exactly right. Right. So, like, and for whatever reason, like, to me, all he had to say was, like, we're showing, like, massive improvement on these new models that we're shipping, but he didn't say that. So, like, that's, all he needed to say was that. He did say that. The thing is that they said that on their 2-hour-long investor briefing, but that was like the whole thing that they were talking about was like, oh, how much money we're saving with all these new innovations and lower computer chips, blah blah blah. He didn't say that on the call. Like, what? Like, anyways.
Yeah.
All right. Let's call it.
Well, that's it. 3 hours. This was fun. I love the intro. Definitely. I got to get my own. This is a good one.
Yeah, we got to get you one. But all right, man, it's been fun. I'll see you on the space, dude. Oh, right. Shoot. I didn't tell you, but we will have, for your guys, we'll have it probably next week. I'll get you guys something set up. We're going to start our school again. So if you want to learn how to do charting, technical analysis, learn a little bit of options, school is back in session later this month. Drop me a follow and we will get you guys set up.
Yeah, if you guys want to get more of Jason's private group, learn more about him, ask him questions, Twitter is where you'll find him, and then his Discord. So please make sure to follow him there.
Appreciate you, man. Adios.
Bye, everybody. Bye, Jason. All right, guys, I'm out as well. This was fun. 3 hours. Hopefully we got a lot of tickers in there. I'll be back tomorrow. There's no big things tomorrow. Tomorrow's what, Wednesday? Yeah, nothing crazy. No, today's Wednesday. Why do I feel like, damn, tomorrow's Thursday already? All right, so tomorrow we get money market inflows and outflows. I will have Chad and a couple other Palantir employees on the market close at 4 p.m. They're going to be talking about a bunch of fun stuff and actually showing off like some like cool technical stuff in terms of demos, getting ready for DEF CON. So that'll be happening. And then Friday, we got non-farm payrolls, and that'll be very, very important. And then we'll end up the first week of October. All right, that's it. Thank you, everybody. Have a good one. I will see you guys tomorrow on the market open. Bye, everyone. Good night.